The market read-through of that as well, and that's going to be a big part of what you're seeing in the cross-asset action. The 10-year yield virtually unchanged right now, but that could change as we start to talk more about the strength. Euro, dollar, and pound seeing some really awesome strength. 109 on euro dollar, 126 on the pound, and of course Brent crude trading at about an 80 handle. Tom.
Checking on those futures then, German futures pointing lower by about 28 points to read across from the industrial profits data out of China, which came in more softly than many had expected, just 2.7% in terms of the gains there. FTSE 100 futures here in the UK pointing lower by 23 points, down 0.3%. I'm looking at the energy sector. I'm looking at basic resources because iron ore is soft today. Oil is also softer. Really crucial data on inflation on Thursday out of Europe and the US, and of course OPEC Plus later this week as well. Over in France, you're looking flat on those futures. Critty.
And of course, those European markets now open. As we kind of wait for them to kind of cascade out, I want to drive you through some of the major cross-asset moves that we are seeing because, of course, risk sentiment, as Tom pointed out, was fairly sour in the European, at least futures session, at least. And that's kind of something you're seeing in the commodity sector as well. Let's see if that translates to the European market open at the moment. But it's this commodity sector that really has my eye. The fact that from Brent crude to nat gas to even some of the agricultural kind of contracts, you are seeing some muted volume and you are seeing a pullback in risk sentiment. That is all contrary to some of the moves you are seeing in the bond market, which, by the way, also catching a bit. Bonds rallying across the board globally. You would think that would mean a stronger dollar as well. Tom, surprise, surprise, it doesn't. And of course, we are getting some of the European markets open as well, kind of in line with what futures were suggesting. The UK FTSE 100 down about 0.2%, but not a ton of action in some of the peripheral markets as well. Spain, for example, Italy, the FTSE MIB, virtually unchanged at those market opens. Even the French index not giving us much, Tom.
Okay, across your sectors then, I wanted to flag energy and basic resources, and this is the reason you're seeing drops now of around 0.7%. Of course, Critty reflecting on the energy sector as well. We're leading up to that OPEC Plus meeting that was delayed. We're looking and expecting many in the markets for cuts, but Mark Cudmore from my MLive team saying probably cuts are already priced into these markets. Energy certainly reflecting that view, it seems, so far in the session this Monday, down 0.7%. Basic resources as well, we can tie that to the China story, industrial profits, the weakness there. Iron ore is under pressure in the session today, and basic resources as a sector currently down 0.6%. That and those two sectors dragging on the FTSE 100, currently down 0.2%. Tech is flat, despite the fact that yields have been ticking up. The context across these equity markets as well, of course, is that for global equities, you're still on track for about 4 weeks of gains. Four sectors currently in positive territory, now 5, but only by a margin. Autos flat, tech, as I said, flat, health also flat, a little bit more coming through for the consumer, but only a margin, 0.1%. Across the benchmark stock 600, you're seeing losses of just 0.1%. It does seem like these markets are still looking for something of a catalyst, Critty.
Yeah, certainly something we're going to be keeping an eye on very, very closely, as are we right here in the UK. Sophia Horta-Acosta joins us from our Markets Today blog to walk us through some of the top stories right here in London. Sophia, public confidence in the BOE in particular, a record low. Now it feels like there's more calls to do something about it. What do we know?
There are. So UK lawmakers are saying that there should be a review into the role and operation of the BOE every 5 years. This is part of reforms to really look into the decision-making process. There has been criticism over accountability at the central bank, especially in the way that it has grappled with inflation, and criticism. We saw criticism also in recent weeks over the errors, supposed errors that the BOE made in hiking rates too late, even though Bailey made it clear that actually the BOE was one of the first central banks globally to hike interest rates. So this is according to the House of Lords Economic Affairs Committee. One of the members is Mervyn King, a former BOE governor, and they're really pushing hard for this. I should say, though, the BOE is not the only central bank facing this kind of criticism and shaking things up. We know also the RBA is also looking at reforms, and also, I mean, the Fed, everyone criticizes the Fed every single day. So this is not unique to the BOE, but again, more criticism for central bank.
And talking of the BOE, interesting, the Newcastle Chronicle speaking to the Bank of the Bank of England Governor Bailey, saying that recent inflation figures are very good news. He's still concerned about prices, a lot of unwinding of the external inflationary shocks, which brings me on to the pound and to what extent the strength that we're seeing in the pound, something that Kriti touched on at the market open, 126 on pound US dollar. How much of that is around that slightly surprise in terms of the strength of the data coming through, or is it the pushback of expectations around when cuts will follow? What is underpinning the relative strength in the pound at this point?
I think it's both, because actually, I like that you mentioned the BOE's Bailey interview with the Newcastle Chronicle, because he's again pushing back against those rate cut expectations, and the market has completely ignored that. What really kind of moved the needle on the market no longer expecting 3 interest rate cuts next year was the strength of the economic data. So I think it's both. I think it's the fact that actually the UK is not doing as badly as feared. That's the tone that I'm using. It's not that it's doing well, but not as bad as feared. And the market is really repricing that, maybe perhaps expecting that the Fed will cut first, and that gap widening there. But I mean, again, the pound is strengthening for perhaps the right reasons now, because it is strengthening the economy that might not warrant interest rate cuts as soon as the market expected. The strongest in 11 weeks, 1.26 for the first time since September, and we're getting some more strength today. I'm just looking at my screen again. Whether this is also dollar weakness rather than pound strength, that's another debate for.
Yeah. 126 on the pound, up a tenth of a percent. As you say, the Bloomberg Dollar Index down a similar level, down about a tenth of 8%. Gilts yields coming in a bit, dropping a little bit, around 3 basis points on the 5-year, 1 basis point on the 10-year. But gilt yields did move up on that data last week. Sophia Horta-Acosta, thank you very much indeed. From our Markets Today blog, you can get more, of course, from Sophia and the rest of the team on the front page of the Bloomberg UK website, or by typing TLIV GO on your terminal. Plenty more coming up. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like, that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today. We're about 8 minutes into the European trading day. Let's get a quick check on some of the individual stocks on the move. Joe Easton's all over it. Joe?
So we're going to start with the broker moves today, Critty. We can see some clear feed through into these. We have BASF cut at Morgan Stanley to underweight. We did that one in stocks to watch. Seeing that one coming around 2.5% down now as well. And the broker Entain is declining as well. This is the bookmaker company, Ladbrokes and Coral owner. They get a downgrade over at Goldman Sachs, who goes sell on that one. Elior is raised to buy at Deutsche Bank. This is the catering company. They say the worst is over for the margins on that one. So that one gaining around 5%. Pretty decent move higher for that stock today. And the private equity giant EQT over in Stockholm is cut. That one's over at Nordea, down to hold. We're seeing that one slipping around 1.5% today. So that analysts keeping us busy in their research notes this morning. Then in terms of those other stocks that we had a few last-minute additions to those companies. Julius Baer put out a statement this morning confirming some exposure to a big conglomerate that's hitting their provisions. They're doing around $600 million worth of provisions for the asset managers. That one coming down today. Rightmove gaining. They've reported some strong sales for them. They did say that their average selling price does seem to be holding up despite the weakness in the UK market. I've just moved house. I won't be moving house again for another 20 years, I don't think, after all of that. But Shaftesbury over in the West End, this is the owner of a lot of Covent Garden stores. Christmas sales looking pretty strong, according to them. Lots of people going out to Carnaby Street and doing their shopping early, and they are rising around 1.6%. And over in baked goods, we've got a Ritzer over in Switzerland, down as much as 5%. Weakness in some of their sales, according to the company, in a statement today in the consumer space. So that one, we're seeing it dropping about 5% in Zurich. In terms of pharmaceuticals, we've got Sanofi. They've got some respiratory drug data out today, better than expected, meeting some of the primary endpoints according to them, and that is getting a bit of a boost. Then we've got the second profit warning in 2 sessions in the computer game space. Last week we had the Toy Story game maker warning in London. Today it's all about Warhammer. They've got a recent Warhammer game out there saying it's not performing as expected. This is Frontier Developments, the worst performing stock in London this morning, down around 19%. ADP over in Paris. I'm asking traders why this one is declining at the moment. I think there might be a broker move out on that one. That's actually the worst performer on the stock 600 today, so keep an eye on that one. We'll try to get to the bottom of that. And finally, Partners Group, Forward Partners Group, this is down 6%. They are being taken over by Molten Ventures, but investors don't like the price on that one.
Joe Easton from our equities team on everything from the housing market to baked goods. Thank you, Joe. Let's get more analysis on these markets then with Trevor Greetham, head of multi-asset at Royal London Asset Management. Trevor, good morning. Thanks for joining us on the studio. I was going to start on this rally that we've seen in global stocks over the last month or so, but you scared the bejesus out of me over the break with commentary about the UK. How much austerity or not should we be bracing for the UK in 2024? How grim is it going to get?
I think it's going to be very painful because if you think about it, you've got the perfect storm of all the debt built up over COVID and the poor growth that Brexit has brought about. And everyone sort of can see the elephant trap for the next administration. You know, you cannot freeze departmental spending in nominal terms when inflation's 10% without the wheels falling off. And what they're basically doing is it's a hospital pass for Labour to say, OK, well, you see how this works. You raise taxes, you cut spending. And Labour is saying, well, you know, spending has to be within the realms of what can be afforded. So I think there's going to be a lot of austerity coming. And I think the pressure to try and improve the strength of the economy by rejoining the single market is just going to build and build. I don't expect Starmer to change tack before the election, but after the election, I think that pressure will become unbearable.
And yet, with all the doom and gloom, cable is still at 126 at the moment. Talk to us a little bit about, is that a disincentive for global investors to hop into gilts or the FTSE 100?
The strengthening pound?
Correct.
Well, it depends. If you're a foreign investor and you're not hedging your currencies, you're picking up the sterling exposure as well. The the incentive to invest in UK equities has decreased a little bit this year because it's all happening in Silicon Valley. So there's a growth stock, a tech-led rally going on at the moment we were talking about a moment ago. And the UK stock market's weighting in the technology sector is 1%.
Is that what it comes down to? Because we have had guests who've come on saying, look, we are at the point now where it's a screaming buy. Whether you look at the oil majors and the valuation gap listed on the FTSE 100 versus their US counterparts, or indeed the FTSE 250, where valuations are just at historic lows. And they say, look, you have to get exposure at some point because otherwise you're just going to mix the upside that is inevitably going to come up and through at some point.
Well, you know, we strategically, we like the UK market. We've got a bigger weighting in the UK than its market.
Are you large cap, small cap? Where in the UK?
All cap in the UK. So we, you know, the pension funds I manage have commercial property in the UK. We have a bigger weighting in UK equities, partly on those valuation arguments. But if you're asking from a tactical point of view, where is the action at the moment? In 2022, the UK was the world's best performing major market because of the oil majors, because of those inflation hedges. But where we are at the moment, the market's trading off US soft landing hopes. And, you know, they may or not be right, but you've got effectively a very strong seasonal rally kicking off. And unless there's a big deterioration in economic data, it's probably going to be US-led.
Well, there's talk of a re-emergence or re-divergence, if you will, between the Federal Reserve and the BOE. So to what extent is the fate of these UK assets really tied to the Fed when the BOE might be doing something completely different?
Yeah, I think everything's tied to what's going on in America. And if America has a soft landing and its stock market is strong, I think that really helps markets elsewhere. But there could be quite a big economic decoupling here because what I'm looking at most of all is the sort of things that could get central banks to ease policy. And in the US, as you know, core inflation's come down dramatically, wage inflation's coming down. In Europe and the UK, it's not. So we've got much stickier, much higher wage inflation. And I think the risk is we need recessions to clear that wage inflation. We don't want them, but it's what central banks will probably end up delivering. Whereas in the US, it's possible the US avoids recession, and that could create a major divergence in markets. And I think it could create a major divergence in currency markets as well, because you can imagine that situation at some point, we're all slashing interest rates to try and offset the damage that's coming through, whereas the US rates may stay more or less at these levels. So you could end up with a strong dollar.
So what are the opportunities that divergence could open up then? How would you position around that?
Well, I think if that divergence comes through, I think you would be overweight US equities. You'd probably be overweight technology. You've got all the earnings story around AI. If bond yields
you
are
believe
also
in that
dropping,
AI earnings?
Well, I think it's probably going to get overvalued. You know, just like the .coms, AI will be everywhere, like internet and websites are everywhere. But you know, you might not make money in the stocks. But for the time being, there's a strong earnings trend in the US off the back of that and other things. And if interest rates are dropping too, that helps the US. But I think it also helps Japan. And it helps Japan because if you do see continued dollar strength, and you just had today Ueda saying that, you know, he doesn't think you'll get 2% inflation in Japan sustainably. Very loose Japanese policy. That's a continued weak yen, which is really helping Japan. And this year, Japan's been the best performing stock market.
So what's your hedge? What's your go-to hedge right now in 2023?
Well, I mean, we've got commodities in the funds, so obviously geopolitics could flare up again. We've got very tight supply-demand in commodities, so we have a commodity hedge in the funds. We're not overweight commodities at the moment. We have them there. I think you've got to be very open-minded. You know, we look at growth and inflation trends. We have something called the investment clock. It's bang in the crosshairs at the moment. You know, growth, there's positive news from the US potentially, but there's negative news elsewhere. Inflation, the easy bit of the disinflation's happened. Sticky inflation could mean inflation rises again. So we're actually quite balanced. And the only position we really have on is quite a strong position, long equities, which we took during the October sell-off. And you might step back from this and say there was a wobble in October, sell in May and go away, buy again St. Ledger Day. If you look at global returns in equities since the 70s, you've got like a 14% annual sterling return from global equities. 13 of it happens between October and May.
Wow.
It's that stark. That's why I mentioned the seasonality. You know, you could get a rally here that's got enough fuel to keep it going into the spring, unless, of course, you get a real cratering in economic data.
Yeah.
And that is possible.
Well, we'll see how much of that we get in the next, I think, 6 weeks or so before the end of the year. Trevor Greetham, head of multi-asset at Royal London Asset Management. Thank you so much for joining the program. He mentioned the geopolitics there in the hedge, perhaps in commodities. Let's get the latest from the Middle East. Israel and Hamas have both indicated that the 4-day pause in the war could be extended to allow more hostages and prisoners to be freed. Hamas has released 58 hostages since the temporary ceasefire began on Friday, and 11 more are expected to leave Gaza today. Let's bring in Oner on, Bloomberg's managing editor for the Middle East and North Africa, for an update. Oner, walk us through the likelihood of an extension here, especially in the context of the fact that in the last 4 days or so, a lot of people didn't even think this ceasefire will last 4 days. Where do we stand on that?
That's correct. A lot of people really didn't believe just as early as last week that this truce was possible, but yet it did become a reality. And now Israel and Hamas are saying that they are considering an extension to the truce. Now, that clause was already built into this original truce agreement that came together last week. And what it means is that when Hamas can release another group of 10 hostages starting from tomorrow, that gives the truce a day-long extension. The idea behind this original clause was obviously to give more time to diplomats and mediators led by Qatar to try and bring the conflicting parties closer to each other and possibly agree on a longer peace term deal. But what is important here is, as you pointed out, just like the truce looked implausible just a week ago, right now we have no indication that Israel, the government of Israel, is taking the idea that there can be a longer-term truce or ceasefire very seriously. They have been maintaining, led by Prime Minister Benjamin Netanyahu, they've been maintaining that Israel's main objective remains unchanged, and that is to dismantle Hamas and remove it from the Gaza Strip so that it can no longer try to execute anything that resembles the attack on Israel on October 7.
And another news line crossing over the weekend, which was around this tanker that has links to Israel, and it was boarded in the Gulf of Aden. What do we know about what is happening with this tanker and what the potential implications of that are?
Well, according to U.S. CENTCOM, that tanker has been freed. There was an attempt by pirates off the coast of Somalia to board that ship, and it looks like they did actually board it, but later they disembarked following warnings from USS Navy warships in the area. What is important about this ship is that although it's been rescued, it's the second attempt, successful or unsuccessful, in just over a week by pirates in the area, possibly Houthi rebels in Yemen who are backed by Iran, to try and seize cargo ships. The first attempt was successful. A cargo ship that is linked to or owned by an Israeli billionaire was seized off the coast of Yemen and actually pulled into Yemen to Hodeidah just over a week ago. But so far, markets seem to be taking this not very seriously, just judging by energy markets and freight rates. There has been very little impact on European gas prices last week, but so far I think the market fallout was extremely limited.
Okay, and thank you for the update. There's plenty more coming up. We're going to look into those Black Friday sales. Retailers, shoppers in the US, I should say, spending almost $10 billion. Stay with us. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year, and so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story. Is there the kind of upside?
This is Markets Today. We're about 24 minutes into the European trading session. Still some very light movement when it comes to these markets, but maybe that'll change as more shoppers actually digest what we've heard from the Black Friday story. Online shoppers in the United States spending a record $9.8 billion on Black Friday. That's according to data from Adobe Analytics. Demand for electronics, smartwatches, TVs, and audio equipment saw sales jump about 7.5% compared to last year. So do we see more of that on this Cyber Monday? Bloomberg's Charlie Wells has all the answers and taking breaks between all your shopping sprees, I'm sure. Tell us.
Kriti, retailers needed this Black Friday. They need Cyber Monday. They have been under so much pressure this year with inflation, with consumers cutting back on discretionary spending. And we've actually heard warnings from some of the large U.S. retailers, Best Buy last week, Lowe's last week, saying that they had to project down their forecasts, that consumers truly are cutting back. So this was the sort of Black Friday that they needed. But the question is, can this momentum continue throughout the entire holiday season? The expectation is potentially not.
Yeah, or is it shoppers pulling forward their purchases and then it's going to ease off in the weeks ahead? What about here in the UK then, Charlie?
So Black Friday really has globalized. It's something that started in the 1960s in Philadelphia, but it's actually, very prominent around the world. Cyber Monday today is something that Amazon really pushed. Some retailers like it. I think in some senses you can capture the consumer earlier. We see advertisements for Christmas, in retailers here in the UK even earlier. The strategy there is capture the consumer and you potentially don't have to discount quite as much. We're seeing some improvements in consumer sentiment here in the UK that actually might make for a better holiday season here, but still, negative sentiment overall across the board in the UK.
Okay, Charlie Wells breaking down those Black Friday shopping sales data for us. Thank you very much indeed. Coming up, more from our exclusive interview with none other than the British Prime Minister Rishi Sunak as we check in on your European stocks. Right now, you are actually edging into positive territory. Flat on European stocks, the benchmark. US futures, S&P E-minis pointing, though, to losses of 0.1%. NASDAQ futures down by a little under 0.2%. Plenty more coming up. Stay with us. This is Bloomberg.
shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Could face bigger challenges next.
It was going to keep bringing World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. Rishi Sunak says his economic plans won't deliver more austerity for the UK and says he wants to, quote, finish the job on sending illegal migrants to Rwanda. We'll bring you more from our exclusive interview with the British Prime Minister. Israel and Hamas look to extend their temporary truce beyond today to allow for the release of more hostages and prisoners. U.S. President Joe Biden backing the move, saying it's allowing the delivery of critically needed aid to Gaza. Plus, Black Friday record shoppers in the U.S. spend almost $10 billion online in the kickoff to the holiday season. Tom, what are you watching in the markets?
Across the benchmark, we're flat, but if you lift the lid, it's a little bit more interesting when we look at the energy sector. You were zeroing in on that earlier in the show because, of course, we're building up that OPEC Plus meeting later this week, which was delayed. Energy as a sector is under pressure today. The FTSE 100, you're looking at losses of about 0.1%, and energy is part of the mix there, along with basic resources. So you're below 7,500 once again for the FTSE 100. Year to date, that index in the UK has essentially added nothing. You are flat, underperforming. Does that trend continue into 2024 is a key question, given that valuations here are looking for many quite attractive. The DAX is currently unchanged, holding at that 16,000 level. And again, across the benchmark, you're flat at 460. The industrial profits data out of China just reminding us of the fragility in that economy and the fact that there are those deflationary pressures still in the world's second largest economy. Let's have a look at how the sectors are breaking up. And of course, the China data ties into what's happening with basic resources. And that sector down 0.4% this Monday morning. Energy, though, taking a bigger hit, off by 0.8%. It's the biggest loser across your sectors so far in this Monday session. Across your sectors, across the 12 main sectors, as you can see, it's a pretty mixed picture. In positive territory, interestingly, given that yields across the US curve had edged a little higher at the start of the session, tech is gaining 0.5%. When it comes to gilts, interestingly, there is a bit of money flowing in to UK debt this morning. We've been hearing from Andrew Bailey, the Bank of England governor, saying that he has seen work has been done on the inflation front. He's still concerned about price pressures. Technology gaining 0.5%. Financial services are flat. Industrials getting a bit of a lift, up 0.2%. Again, across your benchmark, you're flat. 459 here in Europe this Monday. Chrissy.
Yeah, Tom, you were just talking about the UK as well. Let's zoom into that conversation. Rishi Sunak says investors have committed nearly £30 billion to UK projects. This comes as the British Prime Minister hosts some 200 business leaders and investors at the Global Investment Summit in London today. Let's go now to Francine Lacqua, who is, of course, at the event. Francine, outside of the very pretty Christmas decor, what should we be watching out for?
Hi, Kriti. It is pretty festive here, and I think they want to run with this theme of being festive because the UK government keep on telling us that they had £29 billion in investment. Now, we do have some heavy hitters coming here, of course, in Hampton Court, just outside London. We're expecting Steve Schwarzman of Blackstone. We're also expecting Jamie Dimon of JP Morgan. Now, this comes on the back of an autumn statement last week, which in an interview with me yesterday, the Prime Minister tried to justify in saying, look, this is not austerity. Yes, they found some money. This is thanks to the OBR because inflation has gone up. They will use this to fund tax cuts. And he says they'll have to probably pinch at the waistline in certain departments, but he does not, he refuses to be called the austerity Prime Minister. Now, we spoke also at a number of other issues. He would not be drawn into talking about an election date, but I asked him about Rwanda and whether he would challenge, of course, the European Court of Justice, even try and remove himself from it to make sure that flights with asylum seekers from the UK would go to Rwanda. This is what he said.
The British people's priority is to stop the boats, to stop illegal migration. That's why at the beginning of this year, when I set out 5 key priorities I had, one of them was to deliver on that. And I'm really pleased that since I said that, we've managed to cut the numbers by a third. Now, when I got this job, they had gone up and up and up. They'd actually quadrupled in the past few years. But for the first time, they're now coming down. And not down by little, down by a lot, down by a third, when in the rest of Europe, they're going up. So we're making progress, but I do want to deliver on our Rwanda plan, because that's how we will finish the job. And we're going to do everything that I deem necessary to make that happen.
So when, Prime Minister, will you publish a treaty and bill on Rwanda, and will the bill actually contain this notwithstanding clause so you can ignore future legal judgments?
No, what I've been very clear on is that we will address all the concerns that the courts have raised about Rwanda. I would gently point out that the United Nations themselves have used Rwanda for migrant resettlement schemes in the past, and we've worked with the Rwandan government to put in place a treaty which will reassure everyone and address all the concerns that have been raised, and then Parliament will be given the opportunity to scrutinise that and also demonstrate that it believes that Rwanda is safe for this type of program.
But what does that mean, Prime Minister, that you will push it, even if it means going against the European Court?
I think we can act completely in compliance with our obligations, and that's very much the approach we've taken so far. Some objections and concerns have been raised by our court. We will address all of those and then make it crystal clear that our Parliament, which of course is sovereign in these matters, will be able to scrutinise that and then actually determine that Rwanda is safe.
How will you decide when you call an election?
Again, that's something that we announce in the normal way.
But is there a trigger point? Or are you looking at a certain number of something?
I'm not focused on elections. I'm really just focused on delivering on the things that I said I would do for the British people. And that is, now that we've halved inflation, we can turn on to cutting taxes, rewarding hard work. It's also about growing the economy. That's what our support and tax cuts for business were about last week. Also tackling illegal migration, stopping the boats, where we've made good progress already with more to come. These are all the things I'm focused on. And also, we've taken some big decisions here about a more pragmatic approach to net zero, for example, which is something that I think is right, that we've got to bring people with us on that journey. We've got to save working families money as we do it. So, we're doing some big things that are making a big difference to people, and I want to make sure that we deliver on this.
Prime Minister, you've also taken a hard line, of course, on rising anti-Semitism in the UK. The White House has denounced Elon Musk for what happened on X in the last couple of days. Do you do the same?
Yeah, look, I don't tend to get in the business of scrutinising what every single person says who I've interacted with. Of course I abhor anti-Semitism, and as you said, we've been unequivocal from the start of this situation that is not acceptable in our society, and we've been very firm about that. I've personally been very firm about that. It's very sad what is happening.
But are you condemning Elon Musk?
As I said, I condemn all anti-Semitism, right? It's not about any one particular personality. I condemn anti-Semitism in all its forms.
He has a voice. He has a big platform, Prime Minister.
And as I said, I condemn anti-Semitism in all its forms. It doesn't matter whether you're Elon Musk or you're someone on the street who's shouting abuse at someone who happens to be walking past you. That's wrong in all its forms. Anti-Semitism in all its forms is completely and utterly wrong. And we have strong laws in place here to tackle racial hatred. People are inciting it. Some of the scenes we've seen have been unacceptable, and the police know that they should be using the full force of their powers to bring those people to justice. That's what we've been very clear about, and that's what we will continue to do. And we've made sure that the Jewish community gets extra funding here to ensure their safety and security, and we will continue to do that.
So that was the Prime Minister Rishi Sunak speaking to us yesterday at number 10 Downing Street, right before, of course, this big global investment summit. We are expecting a lot of money to be passing hands, but I guess the concern with that is that we don't know exactly how you measure it or when it will go into, but we understand that a portion of this will go into life sciences and technology.
Okay, Bloomberg's Francine Lacroix, of course, on the ground for us at Hampton Court Palace, who will be covering that summit, of course, with the interview with the Prime Minister. Francine, thank you. Coming up ahead of COP28 later this week, we look at the results of our latest Markets Live Pulse survey. We asked market participants, what is your outlook for ESG next year? We bring you the results. That is next. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment cases for this in the world.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Markets Today. We're about 41 minutes into the European trading day. Not a ton of momentum when you look at some of the European stock market, but marginally in the green. And that might actually be where I go next, although not quite as literally. This week's MLive Pulse survey has a green feel to it as well in the lead up to the UN Climate Conference this week. Market participants told us what their outlook is for ESG next year. Joining us to go through the results is Bloomberg ESG and climate change reporter Alistair Marsh. Alistair, how are people thinking about ESG right now when it comes to things like EV stocks, for example?
Well, the results of the survey are pretty ugly, actually. The two key pillars of ESG, clean energy stocks and EVs, the outlook of both of those is pretty dreadful. In fact, on EVs, it's so bad that there's expectation that Tesla will drop out of the top 10 most valuable stocks in the S&P. And this is pretty bad going into COP, because this COP, there's a big focus on getting finance to climate solutions. We need money to finance the energy transition. And so the markets can provide a great functionality for that. And also is in some ways a damning blow to the IRA, the Inflation Reduction Act in the US, where there was great expectation that this would just funnel a wad of money to green. Well, it seems like maybe that's not going to happen in the way we'd hoped.
Yeah, I mean, it's fascinating, right? The Inflation Reduction Act, 300+ billion. The Europeans are coming out with their same kind of spending. Maybe not that level, but they're trying to address the spending that's needed. The UK has taken a different approach, but we are seeing, for example, an electric vehicle company Nissan committing to this electric battery plant in Sunderland. Those investments are happening, and yet investors have turned really sour on this sector. Looking to 2024, how does that factor in? How does climate change factor into people's portfolios and how they're thinking about it?
Well, climate change, I mean, this is the problem. It's what Mark Carney talked about, the tragedy of the horizons, in that climate change is a long-term evolving process that's going to get worse over time. And by the time it's in the investment window of the investment manager, it might already be too late. We might already be seeing the physical damages of climate change at that very moment. So there's this impulse to delay action in investing in that regard. And so that's going to weigh heavily on things like EVs if the politics in the US continue to sour as they have done.
Okay, really interesting, really important MLive Pulse survey. You can get more details, of course, on the website and on the terminal. Alistair Marsh, bring us the details. Thank you very much indeed. We'll stay on this topic because at COP28 this week, nations will be urged to triple their renewable energy capacity by the end of the decade. Well, China, the world's top polluter, of course, is already on track, driven by President Xi Jinping's strategy to develop vast green projects in remote regions. For more on this, we are joined by Bloomberg's Dan Murtaugh, who co-authored today's Big Take, which is fascinating and brilliantly put together. Dan, what has the progress been like then, particularly on the desert renewables projects in China, these remote regions where they've been building out green capacity? How much success have they had so far?
They've had a pretty remarkable amount of success. Xi Jinping announced these projects in late 2021, and the first batch of about 100 gigawatts of these is supposed to be finished by the end of this year. My colleagues over at Bloomberg NEF did some of the very first analysis that's ever been done anywhere, tracking almost every single one of this first batch of projects. They found that almost all of them are either completed already or under construction, and Chinese renewable energy firms have a long history of sort of ramping up right as you come to the end of the year. So it's really likely that they're going to be getting nearly everything they want to online by the end of this year and meeting Xi's target.
But walk us through kind of the science of it, if you will. Why even build them in these remote deserts? What's the benefit?
There's a couple of great benefits. One is that there's not very many people there. You know, China has 1.4 billion people. A lot of areas are really crowded. Land can be scarce. There's also uses like agriculture that are really important. But you go up to deserts like the Kubuchi and the Gobi Desert. You know, there's lots of wide open, vast space. And that does two things. One is it allows you to acquire it quite cheaply. And two is you can build, you know, a whole lot of stuff all at once, which lets you bring down costs. And as an added benefit, the deserts are, you know, really, really sunny, not surprising. And these areas also get some of China's best wind resources. So you put it all together, and analysts look at these things and say this is probably some of the lowest cost energy anywhere on the planet.
So how much work does this actually do in terms of getting China to kind of zero out emissions? What is the time frame for that, Dan? I also wonder, just adding a line of skepticism, China has a long history of problems of overcapacity. Is that a potential risk as well, reflecting on the timeline and then maybe some of the downside?
Yeah. I mean, I think that what we're seeing this year in China right now is these desert renewable projects are really helping accelerate wind and solar capacity to unseen areas. China right now, according to our colleagues at BNF, is on pace to install something like 300 gigawatts of solar and wind this year alone. I mean, that's you know, such a large amount. It's almost 1/8 of the country's total capacity just at the beginning of this year. And that's great. And you know, in a world where we urgently need solutions for climate change, you know, we're seeing probably next year China's emissions are going to go down because all of these new wind and solar plants are going to create more power than China's going to add in terms of demand. And so you're going to rely less on coal. Coal burning is probably going to drop. Emissions are probably going to drop. Now, to your second point, the real question is that sustainable? And that's where we're sort of going to have to wait and see, because you're already seeing in a lot of provinces in China, they've added so much solar power that at the middle of the day, there's way too much for the grid to handle. And when evening comes, you know, this is anybody who lives in California knows this. Evening comes, the sun goes down, but you still need your air conditioner on, and you have to turn back on the gas plants or the power or the coal power plants. And so China needs to keep building out new power lines to connect more desert areas into the cities. They need to build more energy storage, and they need better power market systems to sort of give market signals to these utilities to make sure that they're using all of this infrastructure right. China is trying to do all that. Whether they can ramp that up to match this fast pace of solar and wind adoption, that remains to be seen.
Certainly a very transformational story for China broadly. Bloomberg's Dan Murtaugh joining us from Shanghai to walk us all through. And of course, you can read more of today's Big Take. All you have to do is type in Bloomberg.com on your search browser or search NI Big Take on your Bloomberg terminal. You can get full coverage there. In the meantime, I want to get to some of the other top red stories on the Bloomberg terminal, starting in Russia, which has seen one of its biggest drone attacks in months. The Russian Defense Ministry said 24 drones were shot down overnight and early Sunday morning across at least 4 regions, including Moscow. Ukraine's air defense, meanwhile, said it shot down 71 of 75 drones aimed mainly towards the Kiev region and launched from 2 directions within Russia. It's reported that U.S. President Biden is going to be skipping COP28. The AFP source didn't give a reason for the decision, but aides have suggested that the president is focused on the current conflict in the Middle East. Leaders and officials from more than 200 countries are expected to attend the climate summit that begins later this week in Dubai.
The Reserve Bank of Australia has appointed the former Bank of England official Andrew Hauser as its new deputy governor, making him the first foreigner to hold the position. He'll be tasked with supporting Governor Michelle Bullock as she implements the 51 recommendations of an independent review of the central bank. Bloomberg has learned that TikTok owner ByteDance plans to cut hundreds of jobs and wind down its showpiece brand Immerse. In a major withdrawal from the gaming sector, ByteDance will scrap projects under development and weigh potential sales of existing titles. The closure marks ByteDance's biggest retreat from a once booming gaming industry dominated still by Tencent. And Elon Musk is to meet the Israeli President Isaac Herzog in an apparent effort to diffuse tensions over a controversial social media post. The chief executive of Tesla and SpaceX will also meet representatives of the families of hostages in a closed-door discussion about the need to curb online anti-Semitism.
Meanwhile, coming up on the program, China sounds a warning as a wave of respiratory illnesses hit children across the country. We'll get the latest on that next. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
This is Markets Today. Happy Monday. We are 53 minutes into the European trading session. You're seeing losses across the European benchmark of just 0.1%, so you're flat across the Stock 600. US futures pointing lower by 0.2%. Across your sectors, real estate at the top of the list getting 0.5%. Bottom of the list is energy down 0.7. Let's get to what's happening, though, on the ground in China now. China's healthcare system once again in the spotlight. That's as a wave of pneumonia cases sweeps through the country. China's National Health Commission has warned of a rise in respiratory illnesses as the mainland heads into its first winter since COVID restrictions were lifted. And that's the important context here. Let's bring in Bloomberg's Alan Wan now in Shanghai. Alan, what exactly then is causing these respiratory cases? How severe is the situation right now on the ground in cities like Shanghai?
Well, just like you said, you know, it's the first winter since the restrictions ended. So a lot of these pathogens are coming back in a big way. The difference, it seems like, is that they're all converging at the same time. You've got the flu, you've got the adenovirus, you've got the rhinovirus, and then you've got one pathogen called Mycoplasma pneumoniae, which is actually a walking pneumonia. And that's probably the most concerning because it's hitting young children more than other sectors of the population. And what's also concerning is the fact that apparently it's a lot of these antibiotics that are used in China, these macrolides such as azithromycin have been found to be resistant to walking pneumonia. So that's a bit of a concern. But you have to understand that over the past 2 years, one study suggested that there have been so few walking pneumonia cases that this is just a natural rebound. That said, the situation is still quite severe, especially in the north, Beijing, which you know very well of. According to some reports, some of these pediatric hospitals are being overwhelmed. You have parents with their kids waiting for several hours to see doctors. That said, China, the government has said that the number of walking pneumonia cases among children is starting to ebb. But what it's concerned more about right now is the fact that some of the other well-known pathogens are going to be hitting the broader population now until probably through the spring.
All right, Alan, 30 seconds here. I'm going to put you on the spot. How do you think China's going to be approaching it?
Well, I think they may have learned a lesson from all the criticism they had with their reporting of COVID back in 2019. So when the World Health Organization asked for more information, China has been very responsive. And what do you call it? You've got the local governments being told by the state council to be better at information reporting, also to open up more fever clinics. And also, you've got up in Beijing and up in the north, you have a lot more people wearing masks, especially in the subways. You got parents in some of the afflicted areas, like in Zhejiang, telling the schools, hey, maybe you should shut down or go into or suspend in-person teaching for Zoom in the meantime.
Okay, Bloomberg's Alan Wan in Shanghai on these respiratory illnesses. Thank you for the update on the ground, of course, in the financial hub of China. That's it for markets today. You're looking at European stocks currently flat across your sectors. Real estate getting 0.5, energy down 0.7, US futures lower by 0.2. Stay with us, plenty more coming up. This is Bloomberg.
there's much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised. And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile or more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London with the conversations that matter. Here's what's coming up on today's programme. Rishi Sunak says his plans won't deliver more austerity for the UK. We bring you our exclusive interview with the British Prime Minister.
Government spending in the UK right now is at very high levels. Historically, over this Parliament, it's grown at very high levels, even in real terms after the impact of inflation. So I think any commentary or accusation that that's what's happening is just simply unfounded.
Israel and Hamas look to extend their temporary truce beyond today to allow for the release of more hostages and prisoners. US President Joe Biden backs the move, saying it's allowing the delivery of critically needed aid to Gaza. Plus, Black Friday record. Shoppers in the US spend almost $10 billion online in the kickoff to the holiday season. Now, the UK Prime Minister denies the country is heading towards austerity again, saying claims to that effect are, quote, simply unfounded. Rishi Sunak spoke exclusively with Bloomberg's Francine Lacqua as he hosts the Global Investment Summit. That meeting is aimed at drumming up foreign investment in the UK, with Sunak saying the £30 billion pledged so far is a big vote of confidence. Francine joins me now from that summit. Francine, the PM then says the UK is not heading for another round of austerity. There's clearly sensitivity around that word. What else stood out to you from this exclusive interview?
I'm trying to
Well, Tom, it's very clear that the Prime Minister wanted to send a message for business that the UK is open for business. Now, when you arrive here in Hampton Court, right in front of the plenary, there's just the word great for Great Britain, but great, because he wants to attract those investments. Now, I have to say it's a bit of a Rolodex of anyone in the world with investment to put in that is here. We had Steve Schwarzman, he just walked in. We saw Sergio Armati. We saw Iberdrola, and actually the chief executive was telling me that out of the £29 billion that are being put in the UK, these new investments, he's putting about $12 billion to look at the grid, to look at some of the greening technologies that he's so keen on in this country. But we did have this extensive interview, exclusive interview with the Prime Minister yesterday at Downing Street, and we really talked about the autumn statement, as you say, him pushing back against saying there are austerity measures in there. We also spoke about the European Court of Human Justice, Rwanda. Here he is.
First of all, we're excited to be hosting our Global Investment Summit, and it's our Welcome to Business event. I'm also very pleased that, as you mentioned, we have secured commitments of almost £30 billion of investment. That's more than double, if not triple, what we had when we last held this summit. So I think that's an enormous vote of confidence in the UK, and it comes on the back of a very positive autumn statement that we just delivered with significant support for business. So I think there's real momentum in the UK economy. You're seeing that with tangible commitments from investors at a scale we haven't seen before. So look, we're poised to have a very positive day.
So Prime Minister Jeremy Hunt framed the autumn statement as a pathway to growth, and yet the OBR trimmed their forecast for next year in 2025. Do you think the OBR is being too conservative?
Look, the story of the UK is an economy that has got real momentum. So I've been Prime Minister for just over a year. During that time, we've halved inflation, as I said we would do. We've known now that the UK economy has recovered faster from the pandemic than pretty much any other major European economy. And over the long term, we're still forecast to outperform major European economies. But crucially, business investment has grown faster than any other G7 economy over the last few years. And I think ultimately, if you want to drive growth and productivity in an economy, you need businesses to be investing. We have more momentum for business investment here than anywhere else. So look, I feel actually very positive about the long-term growth outlook for the UK.
So do you think the OBR is actually going to have to revise them upwards? Are you confident that the numbers will come in so that you can continue cutting tax?
What I can tell you is that when I became Prime Minister just over a year ago, not just the OBR, but also the Bank of England, the OECD and the IMF, all of them predicted that the UK would be in recession this year. That hasn't happened. We put in place a set of policies to ensure that it didn't, and I'm delighted the UK economy has outperformed all of those and has grown this year better than anybody thought. So look, I've got a track record in outperforming what people think, and as I said, the UK economy has real momentum now. Inflation has been halved, business investment is growing faster than elsewhere, and as I said, we've got commitments totaling almost £30 billion for our summit, significantly more than we've had in the past. So I think that shows that investors and companies are voting with their pounds and their dollars, and that shows that there is confidence in the economy, and that's what makes me think we're poised for strong growth.
But Prime Minister, if you look at inflation, if you actually exclude energy, it's about been down by like a fifth. So I don't know how much credit the government can actually take on that.
Well, actually, if you look at core inflation, it's pretty much middle of the pack for European economies. Forecast next year to be lower than the Eurozone. And I think in the US, the last numbers I checked. So actually, the momentum on inflation is downwards and coming down faster than peers over the course of the next 12 months, if you look at the forecasts. And we're making sure that we are disciplined with borrowing. Like ultimately, what investors are looking at to make sure that fiscal policy is sensible. We're not fueling the inflationary fire. We're being sensible on public sector wage settlements, and actually you're seeing that feed through to the economy. And as I said, we're also improving labor supply. If I talk to businesses, what they're keen to see is access to labor. We're making sure that our labor market remains flexible, that we're moving people off welfare and into work. All of those things are contributing to, I think, downward momentum on inflation.
But Prime Minister, if the OBR is actually right in their forecast, what does it mean where you can actually find some spending freeze or actually cuts?
Well, what we've just delivered are significant tax cuts. Significant tax cuts for business, significant tax cuts for everybody in work. That's what our autumn statement last week did. The biggest tax cuts in one event since the 1980s, just to give people a sense of scale. For business, what we're doing is making full expensing permanent. So we will be the only major G7 economy, certainly, and even broader than that, where you get a total write-off against your taxes for capital investment. That's an incredibly generous regime to attract business investment. And it comes on top of the fact that our corporation tax rate here is lower than any other G7 economy. And when it comes to individuals in work, we've just delivered a very significant personal tax cut that will put £450 extra in the bank accounts of a typical person in work over the next 12 months, which will also be good for consumption as well.
That you have to find money in, for example, departments where you know that voters actually want you to spend more in certain departments. So are you comfortable as possibly being Prime Minister of austerity?
No, that's simply not the case. Actually, government spending in the UK right now is at very high levels. Historically, over this Parliament, it's grown at very high levels, even in real terms after the impact of inflation. So I think any commentary or accusation that that's what's happening is just simply unfounded. And we're at a point now given how people are feeling, given the amount that's being spent, where I think the priority has got to be lowering the tax burden, right? Government's already spending a lot of people's money, and what we need to see going forward is more productivity out of the public sector. It needs to match what we've seen in the private sector post-COVID, and I'd rather focus on efficiency in the public sector and prioritize cutting people's taxes rather than the government spending ever more of their money. That's the point, I think, and I'm very clear that that is the choice that we are making.
But even if the voter doesn't necessarily feel that tax cuts because of inflation going up, so how much more can you cut taxes in April and beyond?
Well, it wouldn't be right to speculate on future events. We're just still digesting the one we've had, which, as I said, delivered the biggest tax cuts since any event since the 1980s. But what I have said is that this is the start of a journey. And, you know, I meant that when I said, look, after we got inflation down, I wanted to focus on making sure that we reward people's hard work, making sure that we grow the economy, and responsibly cutting taxes. And, you know, when we can do more, we will, because that's the direction of travel here now.
Prime Minister, is the Rwanda flight taking off before the election actually critical to your message to voters, or will bringing down the immigration numbers be enough?
Well, I think the British people's priority is to stop the boats, to stop illegal migration. That's why at the beginning of this year, when I set out 5 key priorities I had, one of them was to deliver on that. And I'm really pleased that since I said that, we've managed to cut the numbers by a third. Now, you know, when I got this job, they had gone up and up and up. They'd actually quadrupled in the past few years. But for the first time, they're now coming down. And not down by little, down by a lot, down by a third, when in the rest of Europe, they're going up. So we're making progress, but I do want to deliver on our Rwanda plan, because that's how we will finish the job. And we're going to do everything that I deem necessary to make that happen.
So when, Prime Minister, will you publish a treaty and bill on Rwanda, and will the bill actually contain this notwithstanding clause so you can ignore future legal judgments?
No, you know, what I've been very clear on is that we will address all the concerns that the courts have raised about Rwanda. I would, you know, gently point out that the United Nations themselves have used Rwanda for migrant resettlement schemes in the past, and we've worked with the Rwandan government to put in place a treaty which will reassure everyone and address all the concerns that have been raised, and then Parliament will be given the opportunity to scrutinise that and also demonstrate that it believes that Rwanda is safe for this type of program.
But what does that mean, Prime Minister, that you will push it, even if it means going against the European Court?
I think we can act completely in compliance with our obligations, and that's very much the approach we've taken so far. Some objections and concerns have been raised by our court. We will address all of those and then make it crystal clear that our Parliament, which of course is sovereign in these matters, will be able to scrutinise that and then actually determine that Rwanda is safe.
How will you decide when you call an election?
Again, that's something that we announce in the normal way.
But is there a trigger point? Are you looking at a certain number of something?
I'm not focused on elections. I'm really just focused on delivering on the things that I said I would do for the British people, and that is, now that we've halved inflation, we can turn on to cutting taxes, rewarding hard work. It's also about growing the economy. That's what our support and tax cuts for business were about last week. Also tackling illegal migration, stopping the boats, where we've made good progress already, with more to come. You know, these are all the things I'm focused on, and also, you know, we've taken some big decisions here about a more pragmatic approach to net zero, for example, which is something that I think is right, that we've got to bring people with us on that journey. We've got to save working families money as we do it. So, you know, we're doing some big things that are making a big difference to people, and I want to make sure that we deliver on this.
Prime Minister, you've also taken a hard line, of course, on rising anti-Semitism in the UK. The White House has denounced Elon Musk for what happened on X in the last couple of days. Do you do the same?
Yeah, look, I don't tend to get in the business of scrutinising what every single person says who I've interacted with. Of course I abhor anti-Semitism, and as you said, we've been unequivocal from the start of this situation that that is not acceptable in our society, and we've been very firm about that. I've personally been very firm about that. It's very sad what is happening.
But are you condemning Elon Musk?
As I said, I condemn all anti-Semitism, right? It's not about any one particular personality. I condemn anti-Semitism in all its forms.
He has a big platform, Prime Minister.
And as I said, I condemn anti-Semitism in all its forms. It doesn't matter whether you're Elon Musk or you're someone on the street who's shouting abuse at someone who happens to be walking past you. That's wrong in all its forms. Anti-Semitism in all its forms is completely and utterly wrong. And we have strong laws in place here to tackle racial hatred. People are inciting it. Some of the scenes we've seen have been unacceptable, and the police know that they should be using the full force of their powers to bring those people to justice. That's what we've been very clear about, and that's what we will continue to do. And we've made sure that the Jewish community gets extra funding here to ensure their safety and security, and we will continue to do that.
Prime Minister, what kind of plan do you have for Gaza? When do you think the fighting will stop? And can the UK actually be involved in the peacekeeping role afterwards?
You know, we've been consistently clear during this awful tragedy that Israel does have a right to defend itself. It should do that in accordance with humanitarian law. And we've also consistently called for sustained humanitarian pauses where aid can get in, but also hostages can come out. And I'm glad that that is now happening. And I think all of us will have seen some of the scenes over the past day or two and find that very heartening. It's important that everyone honours the agreement and we can continue to see more progress. And we will be continuing to talk to all our partners in the region, whether that's the Americans, the Israelis, the Egyptians, the Qataris, to make sure that we can see this through.
Is the UK still for a two-state solution?
Always has been and will continue to be. And we need to redouble our efforts towards that. And that's something we've been very clear about. And I spoke to the Palestinian president when I visited the region specifically about this. The UK will do everything it can to help the Palestinian Authority. We do need to look to the future of Gaza post-Hamas and actually make sure that everyone in the region can look forward to a future where they can live lives of dignity and security and opportunity. That's the vision that I think all of us share, but we've got to redouble our efforts to bring that about.
Well, that was our exclusive conversation with the Prime Minister of the UK, Rishi Sunak. Of course, we'll be here, Tom, throughout the day to try and speak to some of the people that have pledged quite a lot of money. We'll be speaking to the Lloyd's Chief Executive, Charlie Nunn, a little bit later, and also Steve Schwartzman of Blackstone. He just walked here. I understand there's right now a breakfast meeting with the Chancellor, and then they'll come out, there's the plenary, and they'll come and speak to Bloomberg.
Okay, Francine Lacroix at the Global Investment Summit. Thank you, with plenty more interviews coming from that event, of course, through the next few hours. We're going to get back, of course, to Francine then shortly at the UK's Global Investment Summit for our interview with the HSBC UK Chief Executive. That's Ian Stewart. And coming up in the next few minutes, Israel and Hamas have signalled that a temporary ceasefire in Gaza could be extended beyond today to allow for the release of more hostages and prisoners. More on that next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Welcome back. Now, Israel and Hamas have signalled that a temporary ceasefire in Gaza could be extended beyond today to allow for the release of more hostages and prisoners. Speaking on Sunday, US President Joe Biden backed prolonging the pause.
critically needed aid is going in and hostages are coming out. And this deal is structured so that it can be extended to keep building on these results. That's my goal. That's our goal, to keep this pause going beyond tomorrow.
Bloomberg's Israel Bureau Chief Ethan Bronner joins us for more. Ethan, it strikes me that this is the first time that we've heard both the US, Iran, Hamas and Israel all suggesting in their various different ways that a potential extension to this truce is in the cards. How likely do you think it is at this point that this truce will indeed be extended?
I think it's reasonably likely. I mean, don't forget that the original deal agreed by the Israeli cabinet 5 days ago specifically said after the first 50 hostages and 4 days of ceasefire, there could be an extension per day of 10 hostages. So it was baked into the original deal. There's an enormous amount of mistrust between the two sides. So, you know, each day there have been problems, and today there's already a little bit of a problem with the list and with the prisoners who are going to be released. So we'll have to see, you know, with each time it's a matter of hours when they agree. But I think it's reasonably likely that a day or two of extension will occur.
Okay, reasonably likely that a day or two of extension will occur. And you touched on this, and we saw it play out over the weekend. The dispute as well around that humanitarian aid into Gaza. To what extent can the US bring pressure to bear on Israel around getting more of that aid into the territory?
Well, I think the U.S. has been instrumental in getting aid into the territory. I mean, from the beginning, the American position has been to Israel, we share your goal of eliminating Hamas. But if you do so in a way in which people die of disease or of hunger, in which you're not obeying humanitarian law, then that's not going to work at all. So let's take our time here. Let's make sure that there is aid getting in, that the trucks are permitted in, that people are taken care of, that there is not unnecessary civilian death. And that has been the American message, and it has been, you know, relatively accepted here. I think the Americans have had a huge role in how this war has played out.
Well, Ethan, on that front, how much success has there been in getting aid into Gaza, and how much more is needed? How much has gone in the last few days, and what is the deficit still?
I think there have been hundreds of trucks have gone in. I'm in no position to tell you how many more needed. It's obviously virtually a humanitarian catastrophe. People are not able to get into bakeries. They're being forced to eat terrible things right now across Gaza. It is a difficult, very difficult situation, and I think that more needs to get in. I mean, you know, the question of how you define need is complicated. If you're fighting a war and the most important thing to you is to win, then you have minimal notion of needs. The Americans and everyone else are pushing them to increase the amount of humanitarian aid to get in because they want people not to die unnecessarily. They want Israel, at least the Americans want Israel, to be able to pursue this war in a way that doesn't lead to an enormous amount of unnecessary deaths. And a huge number have already occurred, of course.
Okay, Bloomberg's Israel Bureau Chief with an excellent and important insight and update in terms of the evolving situation there as the truce, at least for now, continues to hold. Ethan Bronner, thank you very much indeed. Plenty more still to come. Stay with us. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He called himself self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
The conversations that matter and the insights you need. This is The Pulse. I'm Tom McKenzie in London. Let's get you up to speed on some of the other top red stories on the Bloomberg terminal this Monday. And Russia has seen one of the biggest drone attacks in months. The Russian Defense Ministry said 24 drones were shot down overnight and early Sunday morning across at least 4 regions, including Moscow. Ukraine's air defense, meanwhile, said it shot down 71 of 75 drones aimed mainly towards the Kyiv region and launched from 2 directions within Russia. China's Health Commission says a combination of pathogens is causing a surge in acute respiratory infections across the country. Influenza is one of the main causes of a spike in cases, which have been predominantly seen in children. And it's reported that US President Joe Biden is to skip COP28. The AFP source didn't give a reason for the decision, but aides have suggested the president is focused on the current conflict in the Middle East. Leaders and officials from more than 200 countries are expected to attend the climate summit that begins later this week in Dubai. And the Reserve Bank of Australia has appointed the former Bank of England official Andrew Hauser as its new deputy governor, making him the first foreigner to hold the position. He'll be tasked with supporting Governor Michelle Bullock as she implements the 51 recommendations of an independent review of the central bank. Coming up, we're going to speak to the HSBC UK CEO, Ian Stewart, at the UK's Global Investment Summit. That is next. This is Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point, what is the lesson or the observation?
Welcome back. Rishi Sunak says his plans won't deliver more austerity for the UK. This as he courts investment from international business leaders and investors. We are live from the Global Investment Summit here in London. Israel and Hamas look to extend their temporary truce beyond today to allow for the release of more hostages and prisoners. US President Joe Biden backs the move, saying it's allowing the delivery of critically needed aid to Gaza. Plus, Black Friday record. Shoppers in the US spend almost $10 billion online in the kickoff to the holiday season. Good morning and welcome to The Pulse. I'm Tom McKenzie in London. Let's check in on these European markets then, an hour and a half into the trade this Monday. European stocks still looking for direction. The context is that you have seen gains so far this month of about 7% for European stocks. Across your sectors, you're seeing real estate gaining 0.3% in positive territory, followed by telecoms as well. There's the map then. The UK, the FTSE 100 lower so far in the session today. You're seeing gilt yields on the debt markets here in the UK. Yields just dropping around 1 basis point at the front end. When it comes to the FTSE 100, currently down 0.3%. Energy is a drag there, as is basic resources. France also in negative territory. The IBEX over in Spain just clinging on to gains of 0.2%. A couple of charts to bring to your attention then, and this is the zoom out context as well. Global stocks on track for a 4-week rally, global stocks. And part of this is around the narrative that bad data is good news for stocks. To what extent does that continue? And is there further upside for this equity rally that we are seeing? Mark Cudmore of our MLive team, executive producer there, executive editor, saying that there is still further to run. Now, there's context in terms of the gains that have come through in the last 4 weeks on expectations, of course, that central banks have done in terms of their rate increases and that cuts are in the offing. That debate, of course, remains live and has played into the Treasury market. And here's the chart in terms of the comeback for Treasuries then. Year to date, you are actually now in positive territory, and there's an expectation from strategists that that does continue in terms of the gains coming through and lower yields across the Treasury curve on expectations, of course, that the Fed is done, that the softening in the jobs market continues, that inflation continues on that downward trajectory, and that cuts can come through from the Federal Reserve in 2024. Let's get back to the events unfolding here in London, though. The Global Investment Summit, of course, in the UK capital, and Bloomberg's Francine Lacqua, who, of course, has been speaking to the Prime Minister and is joined now by another guest. Francine.
Yeah, thank you so much, Tom. I have to say it's a bit of a Rolodex of who's who in the world of finance coming through the doors here. I guess to pledge money to the UK, or at least to talk about doing business. The Prime Minister is saying £29.5 billion will be pledged today. Well, I'm delighted also to look at the UK economy because they have a unique insight. I'm delighted to be joined by Ian Stewart. He's the HSBC UK Chief Executive Officer. Ian, thank you for joining us.
Pleasure.
First of all, it is an exciting day. I mean, a lot of questions about the autumn statement, about whether even this cabinet and government will replace or will be in place for much longer. But you're optimistic about the UK. What are you seeing that's making you rosy?
Well, first of all, the UK is proving to be very resilient. We're not in recession, and everyone predicted we would be in recession. And I think the changes that the Chancellor made last week is another boost to business, which will help them hopefully invest more in tech and life sciences. So I think we are optimistic because the UK economy is proving to be very resilient.
Are you surprised about that? Again, interest rates have gone up very significantly. Are you seeing any stress in any of your credit card users or any business finance loans?
We're not seeing excess stress. You see pockets where it's marginally higher than it's been, but nothing in comparison with pre-pandemic. So both the consumer and the UK businesses are proving incredibly resilient. But we've seen that time and time again over recent years. So we should be very grateful that people are managing their cash well in these difficult times.
Were you quite positive about the autumn statement overall? We asked also the Prime Minister whether this was austerity because of cuts that he had to put to fund some of the tax cuts, and he said no.
Well, the Chancellor gave a very good update, actually, in your premises last Thursday night, and he was very clear this was a budget for business to try and drive more growth, and it's a big boost. I mean, the capital allowances alone are really good for businesses who are investing. The key is, will the businesses invest to take advantage of those allowances?
So are you able to muster up business because of it? Have you been in contact with people overseas that maybe want to pour extra money through you in the UK?
Well, it was interesting at the drinks reception last night. There were a lot of overseas investors, and they were very much looking to invest more in the UK. Now, we're in a privileged position in HSBC as we track a lot of the investment coming in, and we also help a lot of our customers go out. And at the moment, people do want to invest in the UK, so I'm not surprised the Prime Minister is talking about £29.5 billion of investment. It'll be good to see that materialise over the next 24 or 48 hours.
Ian, how transformative has been the takeover of SVB UK to HSBC's aims to actually, I guess, build its tech presence?
Well, it's very exciting for us. I have to say it's been a very steep learning curve for myself and other members of the team, but we are excited about the opportunities that bring us. It gives us access into new markets where we weren't really that active before. We've always been in tech, but to get into stage 1 and stage 2 is really exciting for us. And we see a huge opportunity in the UK for the innovation banking side of our business.
So does it help in the UK and then further afield? Does it put a foot in the door for actually more business in the tech space?
Well, you've got to remember, the UK is the third largest innovation market in the world, behind the US and China. So inflows of capital into the UK are strong. We want to capture that with innovation banking and help young, thriving businesses get to the next level. So, yeah, definitely see a great opportunity going forward.
As far as I understand it, the problem is that money comes into the UK, but then the big companies that kind of give back get, if not put elsewhere, they get IPO'd elsewhere. What would you do differently to make the City of London thrive?
Well, first of all, I think everyone's aware of that, and so there's quite a lot of work going on behind the scenes just now, the London Stock Exchange, etc., to try and make that process easier. But we share the frustration. We don't want to see all our great tech companies IPOing outside the UK. It would be great if more of them IPO'd in the UK.
Have you found out what caused the problems with your online furthers late last week?
So on Friday, we did have a technical glitch. Actually, I really appreciate you asking me that. It gives me a chance to apologise to our customers who were impacted. Most customers managed to get their payments made. It was a technical glitch. It was not a cyber attack. We fixed the problem. We've got the root cause as well. So from about Saturday late in the day, everything was working smoothly. But I do apologise for customers who couldn't make a payment. hopefully we've sorted out the issues and payments are going through now.
Was it linked to Black Friday sales?
No, it was purely a technical issue that was behind the scenes. It was with a third-party supplier. We had to get to the bottom of that. We didn't want to take any chances, but we've got that sorted now, so hopefully everything's working smoothly. But again, apologies for anyone who was impacted.
Could you give us an update on actually how many money was spent at Black Friday? Do you have those figures yet, or do you still need to wait for the end of today?
So we were getting data actually all through Friday, all through Saturday, and then you've got Cyber Monday, so we expect a big uptake today. It was marginally up year on year, but it was marginal on the data I've got so far. I will get a further cut at midday today, so we're just a couple of hours ahead of that, but marginally up.
Ian, I'm sure you've met also with some, representatives of labor. What do they tell you about business and investment in this country?
Well, we have had quite a lot of interaction with Labour. It's exactly the same. They want growth. Everyone understands that to make the economy strong, to have the social services that we all want, you need a strong economy. So you can really see the focus on that. And I think that's really good. It protects jobs. It brings more investment into businesses. Hopefully it improves productivity, which is a big issue for the UK. So that's all about investment and confidence. Confidence is a key component, and businesses will invest if they're confident.
And so that's what, just stability? Do you worry that we're going to see market volatility that will lead to instability?
Well, I think as you're in an election year, potentially an election year, people will delay, and we're seeing a little bit of that at the moment. People are pausing. I think there's a cautiousness across business at the moment, but hopefully, as we go into 2024, that will improve. The tax incentives last week will also help that. So, no, I remain in the optimistic camp, but cautiously optimistic.
Okay, what worries you the most, though?
The resilience always is a great thing about the UK. I never cease to be amazed about how resilient people are, and people run businesses. So as long as that resilience remains, we'll get through 2024 and hopefully see more investment. I'm always looking for more investment. That helps us become more productive, protects jobs. So looking to see that investment go up next year.
And any staffing issues? Are you able to find the right people, and do you need to pay them more to keep them at HSBC?
So we've been very consistent. We've got a very stable force, which is good. I think having our senior team in place, I've got a really good senior team around me who are stable, and that's really helped us. So don't see any major changes. The thing that will challenge us is we'll need a new set of skills as we move into the world of AI. We'll need different, fresher skills, so we're reskilling our people and looking for new talent all the time, as you would expect.
Do you expect more consolidation amongst UK banks?
I think that will happen, yes. I can see more consolidation. It's very competitive. The UK has always been a competitive financial services industry, and there's a lot of operators. So I can see more consolidation over the next 2 years.
Ian Stewart, thank you so much for joining us here at Hampton Court at the Global Investment Summit, and we'll have plenty more, of course, throughout the day. That was the HSBC UK Chief Executive Officer. Coming up, we'll also speak to the Lloyd's Chief Executive, and then Steve Schwartzman of Blackstone.
Okay, Bloomberg's Francine Lacroix on the ground for us at Hampton Court Palace with the HSBC UK CEO. Thank you. Coming up, a surge in respiratory illnesses in China as health authorities warn of a spread to the wider population. We bring you the latest from Shanghai. This is Bloomberg.
Much oil to be found in the lower 48 at this point, or even in, let's say, Alaska as well, where mostly we know where all the oil is, and there's no more big Permian Basin kind of deposits anywhere?
People have said that over time, and then we've always been surprised.
And so the U.S. has been explored more than any other place in the world. I think the industry has a good idea, but technology allows you sometimes to recover things that you haven't been able to before. That's the story of shale. The other one that continues to be a positive story is deepwater Gulf of Mexico, where we'll go out and drill in a mile more of water depth and then go down several more miles and find large fields. And the Gulf of Mexico is still relatively underexplored compared to the onshore. So I think there's still room for more discoveries.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The conversations that matter and the insights you need. This is The Pulse. I'm Tom McKenzie in London. Now, this week's MLive Pulse survey has a green feel to it in the lead up to COP28, the United Nations Climate Conference, of course, that kicks off this week, later this week. Market participants have been telling Bloomberg what their outlook is for ESG next year. ESG and climate change reporter Alistair Marsh is here with the details then. Alistair, investors turning a little bit sour on some of those EV stocks. What is behind this turn in terms of the view, in terms of the momentum on ESG from investors?
Yeah, well, it's pretty ugly, actually. So EVs and clean energy, which are two of the kind of core pillars of ESG, the outlook on both of those is souring. In fact, investors who responded to the survey, 60% of them suggest that next year both of those sectors will trade down, and so much so that in EVs, they're expecting Tesla, which is sort of the poster child of EVs, will drop out of the top 10 most valuable stocks in the S&P 500. So pretty bad. And this is not setting a great tone as we run into COP28, where there's going to be a big focus on getting finance to climate solutions like EVs, like clean energy. So yeah, not a great outlook.
On one level, it's completely counterintuitive, given the funding that's come through from the US with Inflation Reduction Act, the funding that's coming through from Europe, and the fact that most investors we speak to say, yes, there is a renewable energy shift now. That change has to happen. So what is kind of underpinning this, and how do you think it looks as you look into 2024? How are investors thinking about how climate change stocks kind of factor into their portfolios in the next 12 months or so?
Right. Well, it does have to happen, and at COP28 there will be a big focus on tripling renewable energy, which will require, of course, trillions of dollars of investment. However, you have a number of things weighing against that. You have inflation, higher interest rates, which have not helped green stocks at all. And in the US, you have this really toxic, I would call it, anti-ESG backlash, which has really sort of soured investor appetite for anything ESG. The sheen has totally come off. In 2020, 2021, anything green was gold. Yeah. But not so much anymore.
Anything green was gold. But it's, as you say, it's become the whipping boy of the political right, at least, in the US. And you're saying that actually has had a material impact, not just a rhetorical impact, but it's had a material impact in terms of fund flows into ESG products.
It has, and in addition to that kind of impact, you also have what's known as green hushing. So those who fear being accused of greenwashing are now doing something called green hushing, which means they may continue to invest in green, they may keep some money there, but they're just not talking about it anymore. And as the returns come off, there's less and less incentive to talk about it.
Okay, so our vernacular and our verbiage around all things climate continues to expand on this, from greenwashing to green hushing. Alistair, thank you very much indeed on those ESG flows, the concern from investors around the role that ESG and climate stocks may play in their portfolios as a result of a number of factors, inflation, politics, and a lot else. Alistair Marsh, thank you very much indeed. Sticking with what is happening in climate change and the focus on funding around some solutions, China is, in fact, part of there's a big push in China, I should say, around funding, of course, renewable energy, and we have a big piece on that. It's today's big take. It's really worth a look. But in terms of other things that happen here in China, and here's where we move on to the health story, because the nation's health commission says a combination of pathogens is causing a surge in acute respiratory infections across the country. Influenza is one of the main causes of a spike in cases, predominantly seen in children. For more, let's go to Bloomberg's Alan Wan then, who's on the ground in Shanghai for us. Alan, it sounds very concerning. What exactly is causing these respiratory diseases? How severe is the situation in cities like Shanghai, Beijing, and elsewhere?
Well, I mean, first you got to understand, it's the first winter since the end of the pandemic restrictions. So there's going to be a natural rebound. But what's unusual is that the number of cases of walking pneumonia, they call mycoplasma, mycoplasma is unusually high. And also, you just have the convergence of all these pathogens, all known pathogens at the same time. You got the adenovirus, the rhinovirus, you got the flu, and then you got the walking pneumonia, all converging at the same time. And with walking pneumonia, it's especially concerning just because it seems that a very popular class of antibiotics called macrolides, such as azithromycin, are not that effective against this, against this illness. So that's particularly concerning. And in terms of how serious it is, well, we've been hearing reports of how, there are pediatric clinics up in Beijing, up in the north, that are being overwhelmed. We're hearing how, like, parents with their kids have to wait several hours to see a doctor. That said, the government has said that it's seeing a decline in the number of walking pneumonia cases among children, but it warns that there could be an upsurge in cases regarding influenza and a more broad-based infections between now and the spring.
So, Alan, how is you touched on a little bit of the government's response to this concerning situation that continues to unfold. Are we likely to see them dipping into any measures they used during the COVID-19 outbreak, or any restrictions being put in place? How are they responding to this spread?
Well, I mean, you got to understand, I mean, China, suffered a lot of criticism for its handling of COVID. So hopefully it's learning from our experience. The World Health Organization asked for more data from China after a recent surge in undiagnosed cases, and China has been responsive. And also, the State Council, a task force, has told local governments to be better prepared for these outbreaks. That means, opening more fever clinics and doing things like that. And also, you have parents telling schools, hey, maybe we should suspend in-house teaching, maybe even go back to Zoom. And you have, people wearing masks again in subways, especially in big cities like Beijing and Shanghai.
Okay, Bloomberg's Alan Wan with an update on the situation around the pneumonia cases and other respiratory illnesses in China. Thank you very much indeed joining us out of Shanghai. Coming up, record online spending in the US on Black Friday. But what is it matched here in the UK? We discuss what retailers can expect this Cyber Monday. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like, that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop
until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in. I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome back. The conversations that matter and the insights you need. This is The Pulse. I'm Tom McKenzie in London. Now, online shoppers in the US spent a whopping and a record $9.8 billion on Black Friday. That is according to data from Adobe Analytics. Demand for electronics, smartwatches, TVs and audio equipment saw sales jump 7.5% compared with last year. So can we expect more of the same this Cyber Monday? Let's bring in Charlie Wells, who's been poring over the data for us. What are we learning so far about Cyber Monday and whether or not that traction continues?
Tom, so I would say it's been a strong start, but I think we know in British English sometimes strong start doesn't necessarily mean a good thing. Basically what we saw is some really solid data coming out of Friday, but retailers have been really squeezed over the past year and they really need a record Christmas quarter to sort of come up for some of the shortfalls that they've been talking about. So big box retailers in the United States have been saying that consumers are really kind of pulling back a bit. They're feeling that inflation pressures are starting to kind of make some trade-offs. And I think consumer sentiment in the U.S. has been lower. And we know that in the U.S. a lot of times house prices, which in a lot of markets have been down, actually impact how more affluent Americans feel and how willing they are to spend. And we're seeing some negative relationships there.
Well, we're seeing house prices in the UK under pressure here, of course. So how are things shaping up? How much demand is there in the UK? The UK economy is in a very different place to the US, arguably kind of less resilience. Are we seeing that demand still for the consumer?
Well, it's really striking and it's really important because consumer spending here in the UK makes up 60% of GDP. So these sales are really important for the health of the economy. And certainly there will be hope that there is demand. We've seen some improvement in consumer sentiment, I think up about 6 points according to GfK, a market research firm. But consumer sentiment in that study is still negative 24. So that's really bad, well below pre-pandemic levels, and so it could be a difficult Christmas for a lot of these retailers here.
And you've touched on the fact that some of the demand may be pulling forward from consumers, their purchases, and maybe sales start to ebb off, so that's maybe a factor to watch as well in the kind of weeks ahead.
Yeah, that's a really good point.
Charlie Wells, thank you very much indeed, breaking down the Black Friday sales data and, of course, what is happening here on Cyber Monday as well and how it's all impacting the UK. Here's some of the other big events we are watching out for this week. Today, 2 p.m. UK time, ECB President Christine Lagarde is set to give her quarterly testimony to the European Parliament's Committee on Economic and Monetary Affairs. An hour later at 3 p.m, we're going to get new home sales data from the US. Charlie just linking the home sales picture in the US to the appetite for consumers to go out and spend. Tomorrow, we're going to be keeping a close eye on earnings from Chinese e-commerce giant PDD, or Pinduoduo, which is a major competitor to the likes of Alibaba and Jingdong, JD as well. And on Wednesday, we're going to watch out for fresh German CPI data, so inflation out of Germany, as we continue to monitor the fragility in, of course, the Eurozone's largest economy. Plus, US GDP data, that is later in the day. Thursday, OPEC Plus scheduled to hold an online meeting after that in-person gathering was delayed last week. And then there's inflation data, of course, out of the US as well, plus COP28. We have live, extensive coverage from the summit. We've got plenty more coming up here, of course, in the next few hours as well. Do stay with us as we look at European stocks across the benchmark down 0.3%. This is Bloomberg.
not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power.
Balance of Power. Live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
I'm a conservative, but I'm not in a bad mood about it. Fellow
Who's in a bad mood about being conservative? Is that because you feel like populism has taken control of your party?
And Joe Matthew.
What is it about race that bothers you about the new chairman of the Joint Chiefs?
Our military is becoming so political that we're going to go south when it comes to readiness.
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg. Context changes everything.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Israel and Hamas look to extend the temporary truce beyond today to allow the release of more hostages and prisoners. Prime Minister Rishi Sunak denies the UK is heading for austerity. He spoke in an exclusive interview with Bloomberg.
Government spending in the UK right now is at very high levels. Historically, over this parliament, it's grown at very high levels, even in real terms after the impact of inflation. So I think any commentary or accusation that that's what's happening is just simply unfounded.
And Cyber Monday is set to bring another wave of deals for consumers after a record online spending spree during Black Friday. A very good morning, Monday morning. Lots of things to get your teeth into. We had our very own Black Friday on the US Treasury market. We went back to black. This is incredibly important. We've had this momentum, a dramatic recovery in the bond market. Can that continue? As I say, our very own Black Friday in that Treasury market. And you're going to pivot from bear steepeners to bull steepeners, according to Standard Chartered Eric Robertson there. Let's have a look at the rest of the Treasuries. You're seeing a small pop, ever such a small pop in Treasury yields this morning, up at 449. But just think of the journey that you've had. As I say, you are looking at, I suppose, we've gone from, what, 502%. We've had dropped all the way back to this 450. Now, of course, the question is, what is the capacity for surprises this week? You have Powell and the PCE. Are they going to be ground-shaking movements for the bond market? Is this a prelude to a much broader set of gains? Because, of course, the spending on Black Friday was monumental. We saw that go through. Crude is down by 1.65%. Again, what you're seeing here is a fourth day of a drop in the oil market. Is OPEC Plus closer to hammering out a deal with Angola and Nigeria? OPEC watchers think that there will be deeper supply cuts. The dollar starts on the back foot today. The bears have had a good month. We're down over 3% on the dollar this month. Of course, we've gone from that peak Fed and pivot. The question is now, as ING say, don't chase the dollar bear story. We'll put that to Dominic Bunning in just a moment, Danny, from HSBC. But for the moment, the dollar's on the back foot. The question is just how hedonistic are the U.S. consumer going to be today? Good morning.
I want to know that question from you, Manis, because you are a U.S. consumer now. You've crossed over. You're doing your Black Friday shopping. All right, well, do you also want to chase the U.S. stock market rally? We're up nearly 20% this year. Who would have thought that that's where we'd be ending the year? Basically, no strategist did. We are giving some back this morning. We're down about 1/4%. But Deutsche Bank out with a new prediction for stocks in 2024 that they are going to hit a record 5,100 on the mark. We're at 4,555, so we got some ways to go until then. We're also looking at weakness in China. We had industrial profits coming in from Chinese companies. They did rise, but significantly less than prior months. So you're seeing that weakness come through, down 0.7%. And just really showing this calmness in the market, we're just over 13% on the VIX. On Friday, this thing fell to under 12.5. Man, that is the lowest level for the VIX since January 2020. It seems that one of the big things that has been thrown out to the end of the year is investor caution. Let me show you that in another form. It is your 60-40 portfolio. This thing's death had been talked about over and over again this year. Look at what it's done this month. It is up 7%, Manis. That's the biggest amount since back over there since November 2021.
Well, let's just hope that it runs that form, and perhaps my retirement fund will eventually come to fruition. There's also the flow show as well. If you look at global equities, what do we have? I mean, we both looked at this number. $43 billion went in so far in November. Think about the yields came down by 50 basis points. Equities got a nice lift, Danny. $43 billion went in November, and $1.1 billion came out of cash last week, which takes us, of course, to these big bullish calls, the likes of Subramaniam over at Bank of America, talking about 5,000. Then Deutsche Bank, you got Chandra coming out with an S&P target of 5,100. I just hope the pension fund from Dubai gets to the US in time to get invested.
Someday you'll be able to retire, Manis. Someday.
Absolutely. You won't be done with me yet. But let's talk about the dollar. I mentioned it to you at the start in the cross-asset whip. It's extending its declines ever so slightly. We're going into the third week of losses. HSBC's Dominic Bunning says the market uncertainties heading into 2024 is set to favor the dollar. Now, he says, quote, "We have emphasized that our strong dollar outlook is based upon soft global growth, relatively firm U.S. yields. It does not take much of a soft landing idea to become something more discouraging. I fear for 2024. Dominic Bunning is in the house, HSBC, head of European FX research. So it could feel like a soft landing, but it wouldn't be much to turn it over, Dominic, would it? You are fearful for 2024?
Yeah, I wouldn't say I'm outright fearful, man. I don't want to put, people off their Christmas joy just yet. But look, the thing is, when you look at global growth dynamics, and I think compared to this time last year is particularly instructive, there was a lot more reason for optimism. Back in November 2022, we were going into this China reopening story. In Europe, we'd had a big decline in energy prices. There was this idea that the Fed was obviously peaking. This time around, it's not quite so encouraging. The data pulse out of China is still pretty soft. Europe and the UK are not getting that upward lift from lower energy prices. That's really stabilized. And if anything, growth dynamics in this part of the world still look very, very challenging. And yes, the Fed is not going to be hiking anytime soon or even further from here. But my question is whether they cut as quickly as the market is expecting. So from both of those perspectives, the weaker global story and the relatively resilient US story, I do still think that favors dollar strength going into 2024.
What do you then make of just the past week? And I realize 1 week doesn't a trend make, but we have seen yields creep higher on Friday. Okay, not even a week. So we have seen yields creep higher on Friday, but the dollar continues to weaken. Why aren't we getting that lift?
So I think there's two things to look at here. One is what's happening on the yield side, and one's what's happening with broader risk appetite, so really equity markets. And we know that the dollar has that counter-cyclical relationship with equity markets. So when equities are holding up quite well, the dollar tends to soften. When equities are falling, the dollar does quite well. So whether the dollar's reacting to yields or equities is kind of the big question. And we've been flip-flopping back and forth between that over the last few years. The difficulty I have really at this point in seeing much higher equity markets and therefore a much weaker dollar is that how do you get that drive higher in equities without either much lower yields or much stronger growth dynamics? And at the moment, I'm not really seeing the signs that that's going to play out. I mean, there is a possible Goldilocks scenario. It is plausible that inflation keeps coming down nice and gently, but demand stays resilient. But I think that's maybe a slightly lower probability.
The Santa rally, Dominic. Crashing the Santa rally.
I mean, Dominic, this comes down to how you see the dollar, and we've had this classic all year. One is a rates narrative, which is the alpha, and then it is the risk-off narrative. And when we go into this risk-off narrative or global growth slowing down, as you said, the dollar is still a haven. When you look into 2024, what is it, who is going to lose the most against the dollar? Is it going to be sterling? I mean, I have a lot of the other currencies capped out in the recent run.
Yeah, I think if you look at the biggest challenges, they really relate to this part of the world, the UK, Europe, maybe even the Scandinavian currencies linked to that. And ultimately what this comes down to is the nature of the recovery, even going back from 2019, from before the pandemic. One of the things we've looked at a lot is how has the domestic economy recovered in various places? And the US consumer is over 10% bigger than it was in 2019. It's basically still on the pre-pandemic path. The issue in Europe and the UK, for example, is we're barely back to pre-pandemic levels of consumption, let alone growth rates. So to me, that all says that the underlying growth story in this part of the world is weaker, and therefore it's just much, much harder to justify rates staying as high for as long and currencies staying resilient in this part of the world. So euro and sterling, to me, are the big downward movers.
Well, because at the moment, this market is pricing that the ECB and the Fed cut at the same time in June, and that the BOE cuts even later than them in September. Would you basically flip all those orders around?
Yeah, a little bit. I think just if you were looking at growth dynamics, I think you kind of had the Fed cutting last in many respects. Obviously, inflation's come down a bit sooner. There are still some residual elements of sticky inflation in Europe and the UK, and I think that's why this week's data in Europe in terms of CPI is going to be really important. How much headline and CPI come down, where that sequential sort of data pulse is looking like. Look, I think the ECB and the Bank of England have to stay hawkish in the short term because they do still have that fear that maybe we get some second round effects. But we know that labour markets are starting to loosen already. We know that, as I said, underlying growth is not as strong. And I think when you start to think 3-6 months ahead from here, I think the ground could have shifted a bit, and the ECB and the Bank of England might have started to sound a bit less hawkish.
So then inside your world, the dollar remains exceptional or king dollar. But if you look at what Bailey's saying this morning, I think he went to the North of England, one of the North of England newspapers, as he does. He takes the message beyond the M25. Yes, there is a world beyond the M25, just for both of you. Huh. Yes, there is. September inflation dropped from 6.7. I live beyond the M25. We've dropped from 6.7% to 4.6%. We're not going to see a rerun of that again, Dominic. And this is what he says. Suggests that cuts are unlikely for the foreseeable future. Again, reiterating this really to the market. But the question is, of course, for both him and Lagarde, is that they can say all that they want, but they may be forced into something else if the Goldilocks, well, they don't have Goldilocks, but they could be forced into cutting harder and more aggressively than they're currently jawboning.
Yeah, I mean, just to point out, HSBC's got a pretty good UK corporate franchise. I'll be visiting customers in Liverpool and Manchester this week, well outside the M25, so I do get a sense of what's happening in the real world. But actually, when I speak to our customers, I think the challenges they face have really shifted versus a year ago. I go back to a year ago, and the challenges were, I can't find enough staff. Wages are going up far too quickly for us to cope. Now, a lot of the question marks around demand. Are we going to be able to pass on any price rises given the demand weakness they're seeing? So I think the corporate story in terms of UK PLC does seem to be shifting a little bit, certainly from the conversations we have. And as I said, look, I think Bailey, he has to kind of keep up that hawkish tone for a period of time. He doesn't want the market to get ahead of itself in terms of rate cuts. But I thought it was interesting, not that long ago, Hugh Pill kind of flirted with the idea that they could get rate cuts. He seemed to get, a little bit of a slap on the wrist maybe, and the next week his tune had changed. But it kind of does suggest that behind the scenes, it's not a one-way conversation. I think the Bank of England has to be aware of what's happening on growth. They have to be aware of some of the looseness that's coming through in the labour market, and it's not just going to be all about inflation from here.
Manis, before we let Dominic go, I just need to affirm, I was in Cornwall 2 weekends ago, so I have seen the outside of the M25. I know it exists.
Yeah, I know. Look, let's be frank now. It's just Heathrow that you go to very often. Come on, but you've got a few weeks left to get a few more outside the M25.
Is that Northern England? All right, Dominic, thank you so much for joining us. That's HSBC's Dominic Bunning. All right, Manus, let's get to some other top stories that are trending on the terminal this morning. China's Health Commission says a combination of pathogens is causing a surge in acute respiratory infections across the country. Influenza is one of the main causes of a spike in cases, predominantly seen in children.
TikTok owner ByteDance plans to cut hundreds of jobs and wind down its showpiece brand, Immerse. In a major withdrawal from the gaming sector, ByteDance will unwind projects under development and weigh potential sales of existing titles.
Elon Musk will meet with the Israeli President Isaac Herzog in an apparent effort to diffuse tensions over a controversial social media post. The CEO of Tesla and SpaceX will meet representatives of the families of hostages in a closed-door discussion about the need to curb online anti-Semitism.
Coming up on the show, our exclusive interview with the UK Prime Minister Rishi Sunak sat down with our very own Francine Lacroix. Coming up.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it. This is Bloomberg Brief. I'm Manus Granny in New York, Danny Berger in London. So the Global Investment Summit in full swing in London. Bloomberg's Francine Lacroix sat down for an exclusive interview with the UK Prime Minister Rishi Sunak. Let's take a listen.
We're excited to be hosting our Global Investment Summit, and it's our Welcome to Business event. I'm also very pleased that, as you mentioned, we have secured commitments of almost £30 billion of investment. That's more than double, if not triple, what we had when we last held this summit. So I think that's an enormous vote of confidence in the UK, and it comes on the back of a very positive autumn statement that we just delivered with significant support for business. So I think there's real momentum in the UK economy. You're seeing that with tangible commitments from investors at a scale we haven't seen before. So look, we're poised to have a very positive day.
So Prime Minister Jeremy Hunt framed the autumn statement as a pathway to growth, and yet the OBR trimmed their forecast for next year in 2025. Do you think the OBR is being too conservative?
Look, the story of the UK is an economy that has got real momentum. So I've been Prime Minister for just over a year. During that time, we've halved inflation, as I said we would do. We've known now that the UK economy has recovered faster from the pandemic than pretty much any other major European economy. And over the long term, we're still forecast to outperform major European economies. But crucially, business investment has grown faster than any other G7 economy over the last few years. And I think ultimately, if you want to drive growth and productivity in an economy, you need business businesses to be investing, we have more momentum for business investment here than anywhere else. So look, I feel actually very positive about the long-term growth outlook for the UK.
So do you think the OBR is actually going to have to revise them upwards? Are you confident that the numbers will come in so that you can continue cutting tax?
What I can tell you is that when I became Prime Minister just over a year ago, not just the OBR, but also the Bank of England, the OECD and the IMF, all of them predicted that the UK would be in recession this year. That hasn't happened. We put in place a set of policies to ensure that it didn't, and I'm delighted the UK economy has outperformed all of those and has grown this year better than anybody thought. So look, I've got a track record in outperforming what people think, and as I said, the UK economy has real momentum now. Inflation has been halved, business investment is growing faster than elsewhere, and as I said, we've got commitments totaling almost £30 billion for our summit, significantly more than we've had in the past. So I think that shows that investors and companies are voting with their pounds and their dollars, and that shows that there is confidence in the economy, and that's what makes me think we're poised for strong growth.
But Prime Minister, if you look at inflation, if you actually exclude energy, it's about been down by like a fifth. So I don't know how much credit the government can actually take on that.
Well, actually, if you look at core inflation, it's pretty much middle of the pack for European economies, and forecast next year to be lower than the Eurozone. And I think in the US, the last numbers I checked. So actually, the momentum on inflation is downwards and coming down faster than peers over the course of the next 12 months, if you look at the forecasts. And we're making sure that we are disciplined with borrowing. Like ultimately, what investors are looking at to make sure that fiscal policy is sensible. We're not fueling the inflationary fire. We're being sensible on public sector wage settlements, and actually you're seeing that feed through to the economy. And as I said, we're also improving labour supply. If I talk to businesses, what they're keen to see is access to labour. We're making sure that our labour market remains flexible, that we're moving people off welfare and into work. All of those things are contributing to, I think, downward momentum on inflation.
Prime Minister, if the OBR is actually right in their forecast, what does it mean where you can actually find some spending freeze or actually cuts?
Well, what we've just delivered are significant tax cuts. Significant tax cuts for business, significant tax cuts for everybody in work. That's what our autumn statement last week did. The biggest tax cuts in one event since the 1980s, just to give people a sense of scale. For business, what we're doing is making full expensing permanent. So we will be the only major G7 economy, certainly, and even broader than that, where you get a total write-off against your taxes for capital investment. That's an incredibly generous regime to attract business investment. And it comes on top of the fact that our corporation tax rate here is lower than any other G7 economy. And when it comes to individuals in work, we've just delivered a very significant personal tax cut that will put £450 extra in the bank accounts of a typical person in work over the next 12 months, which will also be good for consumption as well.
That you have to find money in, for example, departments where you know that voters actually want you to spend more in certain departments. So are you comfortable as possibly being Prime Minister of austerity?
No, that's simply not the case. Actually, government spending in the UK right now is at very high levels. Historically, over this Parliament, it's grown at very high levels, even in real terms after the impact of inflation. So I think any commentary or accusation that that's what's happening is just simply unfounded. And we're at a point now, given how people are feeling, given the amount that's being spent, where I think the priority has got to be lowering the tax burden, right? Government's already spending a lot of people's money, and what we need to see going forward is more productivity out of the public sector. It needs to match what we've seen in the private sector post-COVID, and I'd rather focus on efficiency in the public sector and prioritise cutting people's taxes rather than the government spending ever more of their money. That's the point, I think, and I'm very clear that that is the choice that we are making.
Prime Minister Rishi Sunak speaking exclusively to Bloomberg's Francine Lacqua ahead of the UK Global Investment Summit. Now, don't miss another exclusive conversation coming from that summit. Francine will be sitting down with Lloyds Banking CEO Charlie Nunn on Bloomberg.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one, okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's Bloomberg Brief with Danny Berger in London. Manus Cranny is in New York. Manus, did you get your Black Friday shopping in? Because I'm not sure there's anything left. U.S. consumers spent an insane amount online. I think that's the technical term. A record $9.8 billion were spent in the U.S., according to Adobe Analytics. Maybe this consumer has more to give.
Yeah, I mean, we both went back and looked at Paul Donovan's quote, which was never go short the U.S. consumer, of which I'm technically now a part. Earning in dollars, paying tax in dollars, and yeah, I joined in, but I wasn't one of the ones that. I got a new suit. You'd be glad to know, from a store nearby, 25% off, and the TV I think was like 30% off. And I even went to sign up for a store card. They declined me.
I think that's the most American thing that could happen, is try to get a new credit card and be denied. That feels uniquely American, Manus.
No, do you know what it was? The guy said to me, he said, "We'll give you another 20% off if you sign up for a credit card." And I said, "Yeah, okay, we'll find it out." But I've lived here for 2 months. I have no credit history whatsoever. I have got a credit card from an institution, but I have no credit history whatsoever in this country. And he sort of went,
Manus, like you, I don't know what's happening. You've truly gone full American. You're trying to spend more, trying to get more credit cards. You're trying to, I don't know, your credit score is being denied apparently. Whereas me, you know, I'm just here in the UK, not doing any Black Friday shopping, saving my money, trying to be responsible. I am a changed woman.
You're just going to go hard and heavy on Cyber Monday. The point about it is, I think this is the biggest warning signal of all. Buy now, pay later. That climbed to 72% from the week before Thanksgiving. Be wary, be warned.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of On's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined On as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but On's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back to Bloomberg Brief. I'm Manus Strani in New York.
And I'm Danny Berger in London. Here's what you need to know. Israel and Hamas look to extend their temporary truce beyond today to allow for the release of more hostages and prisoners. Prime Minister Rishi Sunak denies the UK is heading for austerity. We're live at Global Investment Summit with more exclusive interviews. And Cyber Monday is set to bring another wave of deals for consumers after the record online spending spree during Black Friday. Maybe don't discount American exceptionalism. We've seen that in American equities that are up double digits for the year. We take a pause this morning after the frenzy of Black Friday. We're down not as bad as we were to start the morning, down about 0.1% in the S&P 500. Deutsche Bank, for their part, is out with a new call, 5,100. That's where we're going to end 2024 at a new record. So is it time to load up the boat whenever we got dips? CSI 300 weaker in today's session, down 0.7% after industrial data in China that grew, but weaker than prior months. So maybe the China slowdown, or at least the China growth, isn't as good as we thought it might be. And the VIX ticking up slightly, but man, as this thing on Friday ended below 12.5%, that is the most calm this market has been since January 2020. The Santa rally, has it already come? Are we preparing ourselves? I don't know, but one thing is true. We're going out shopping, but we're not buying hedges.
No. Well, of course, the calm before the storm. We are shopping like lunatics here in the United States of America. Online shopping, Black Friday was momentous. $10 billion was spent. So that consumer being so strong, being so fervent, has knocked the Fed pivot out of the sales of the bond market. We're back to black in U.S. Treasuries for the month of November. But you're looking at U.S. Treasuries this morning, just popping a little bit higher today. Again, that whole momentum, we've traveled from 5.02% to 4.5%. Have we exhausted ourselves in November? We've just had Dominic Bunning here from HSBC saying he doubts that the risk of the cuts that the market sees are going to come true there. Oil is down by 2% this morning. It's day 4 of a drop in oil. You're looking at back-to-back monthly loss. We've down by 5.5% in November. OPEC Plus, will they do a deal with Nigeria and Angola as we go to a virtual meeting later this week, or is it going to take deeper cuts to settle this market? $74 on WTI. The dollar is, I'd call it flat at the moment, but the dollar bears are in charge. We're down 3% in the month of November. Again, HSBC would point out perhaps the market is just too aggressive in the rate cut narrative that it sees from the Fed into next year. Don't chase the dollar bears. That's the view from ING. So at the moment, Danny, the dollar just starting the week on an ever such a small back foot. We're down for what? This is the 3rd week of declines in the dollar.
Yeah, and Dominic from our guest from earlier today, Dominic Bunning from HSBC, was saying that the dollar is going to strengthen not just because of cuts that are going to be delayed from the Fed, but the fact that this market is pricing the same time for Europe in the Fed and then later for the UK. Man, as perhaps that doesn't make sense if, as Dominic said, European growth is weaker, perhaps the ECB and the UK are going to be the ones to need to cut first.
Yeah, and you've got Bailey out in a North of England newspaper today, again, pushing back on that rate cut narrative and push back on austerity. Of course, he had that sit-down interview with Francine Lacroix a little bit earlier on. We heard from him, I'm not going to be the Prime Minister of austerity. So that's what Bailey's got to contend with. Danny.
Yeah, and it's true. So what we heard, the UK Prime Minister, as Mano was saying, Rishi Sunak had denied accusations that the nation is headed for tax cuts, spending cuts rather, after tax increases, after Chancellor Hunt rolled out £21 billion of personal and business tax cuts in his autumn statement. So in that exclusive interview with Francine Lacroix, the Prime Minister addressed that. Take a listen.
This is the start of a journey. And, I meant that when I said, look, after we got inflation down, I wanted to focus on making sure that we reward people's hard work, making sure that we grow the economy, and responsibly cutting taxes. And, when we can do more, we will, because that's the direction of travel here now.
Let's now return to the Global Investment Summit, where Bloomberg's Francine Lacroix is standing by with another exclusive interview. Francine.
Danny and Manus, good morning. I'm delighted to be joined here today at the Global Investment Summit, where we just heard from Rishi Sunak after we spoke to him yesterday about global Britain being open for business. I'm delighted to be joined by Charlie Nunn. He is the Chief Executive Officer of Lloyds Banking Group. Charlie, thank you, as always, for giving us a little bit of your time on Bloomberg TV. How would you rate the openness, actually, of investment, both domestically but also globally, of money coming into the UK?
Well, first of all, thanks for having me. It's great to be here at the Global Investment Summit today. Investment in the UK is actually lower than it has been at the moment in time, than it has been historically, and given domestically the uncertainty in the economy, we've got a relatively lower level of domestic investment at the moment, which is why I actually think an event like this and a focus on trying to get more investment in business and in the UK is so important.
But, so what's the, what does the UK offer to global business? I know they're making a pitch now. If you're a global investor, where do you put your money to work?
So as you know, I'm British, so I'm going to do an unashamed sales pitch as well. But the UK has some of the strongest industries in the world, and definitely within Europe. So if you think about the tech sector, the life sciences sector, education, the creative arts, financial services itself is actually the biggest exporter of financial services in the world. We have some fantastic industries. Underpinning all of that, we have a leadership around a number of the transition to net zero technologies and industries in the world as well, and it's a real source of investment in the UK for the energy transition, wind farms as an example, and housing.
But Charlie, so we've seen a lot of investors actually come on this show and say, look, we're worried about the energy transition because the Rishi Sunak, the Prime Minister, probably took a bit of a U-turn to appease certain people in his party. Do you see any lack of investment gusto for the green transition?
No, the underlying economics of the energy transition, when you look at the economics of wind power and solar power, the transition that the UK's made as a leadership position away from coal to gas and then now to green energy, that long-term trend is really quite secure, and green energy is more secure and it's cheaper. And if we continue to invest, I think most businesses, most capital can see that long-term investment opportunity.
How's productivity holding up in the UK?
So as you know, productivity has been one of the challenges for this economy. It's why at the moment, with the uncertainty we have in the economy, we're really focused on trying to say, as Lloyds Banking Group, how do we help more investment domestically and internationally for businesses of all sizes? So small businesses, medium-sized businesses, and the largest international firms need to invest for us to get that productivity over the next 1, 3, 10 years.
You're very optimistic about Lloyds Banking Group. I think you left your guidance for net interest margins, which is a key measure of profitability, even when some analysts are saying, look, we worry about the deposits, we worry about consumers going forward.
Yeah, I mean, Lloyds Banking Group, as you know, is the largest retail and commercial bank in the UK. We've got about $1 trillion that we invest in the UK. We lend about £450 billion to consumers in the UK and businesses in the UK. So we're managing Lloyds Banking Group very much through cycle. We're halfway through our first stage of our strategy, which we announced in 2022, and we're investing £4 billion in trying to make Lloyds even more customer-centric, more relevant for the future, and to get some growth. And we're managing, you mentioned net interest margin. We manage our net interest margin to support customers through the cycle. Today, we're about just over 300 basis points. Lloyds Banking Group was at that in 2018 when interest rates were almost at 0%. So we manage with that through cycle mindset in support of customers.
How confident are you that your customers are okay, and what kind of impact will they see from the autumn statement?
So at the moment in time in the UK, it's a very uncertain time, and it's difficult for many customers. Whether you're an individual or a household dealing with the cost of living, a business dealing with higher rates, or just the uncertainty about the future, what we've seen is a significant number of the customers in the UK have got real difficulty, real uncertainty at the moment. We're focused on these two things. One is for those that are struggling to make ends meet, either individuals or businesses. There are some businesses and individuals, really making sure we're there to support them. Our ask has always been, please just contact us, because there's so many things we can do to support you. And at the same time, trying to build that confidence for investing into the future, to get that focus on business and government investment for productivity, growth, and future jobs.
But how much distress do you see out there? And are you surprised that actually the economy has been pretty much resilient, even if a lot of people are struggling?
So the story we told earlier in the year, when we talked to, let's say, households and individuals, about 70 or 80% of people are really uncertain and are really nervous about the current environment. 20% of people in the UK are having to make tough choices to make ends meet, and less than 1% can't make ends meet. That's been pretty stable this year. It's getting more challenging for some people and some businesses, but that's been pretty stable. And we've seen some real wage inflation this year, or growth this year. Real wages have actually increased this year, so we can see some stability. 2024 is not going to be an easy year. We're not predicting a recovery in GDP growth. And in fact, we're predicting as our baseline a slight increase in unemployment. So we know households are going to have a difficult period for the next 18 months, and we're here to support them.
What can you tell us about the Telegraph sale?
Obviously, that's been a process that's been managed independently from me. It's been playing out in the media pretty clearly, so nothing else to add from me on that.
Do you have an inclination to either say yes or no to one of the offers? We know Redbird, IMI are in the mix.
So there's two things going on that you're aware. The government's obviously will be down to them to decide what investigation or oversight they provide with the sales process. The actual process we have itself is being run independently from my role. You can imagine it would be very difficult for me to be involved by that. We have an independent board. We have an independent organisation, Goldman's, running the sales process. So very keen for it to go ahead clearly. I'm absolutely focused on making sure I do the right thing for Lloyds Banking Group and our shareholders in that context, and obviously let the processes run as they will run.
All right, Charlie, thank you so much for your time today. That was Charlie Nunn there, the Lloyds Banking Group Chief Executive Officer. With that, I'm going to send it back to you in New York and London. We'll have plenty more throughout the day here. Coming up, we speak to the Blackstone Chief Executive Officer, Steve Schwartzman.
Francine, we're looking forward to that conversation. Great conversation with the Prime Minister, setting the tone across those couple of days at Hampton Court. Francine Lacroix on location. Schwartzman's up next with Francine, the Blackstone Chairman and CEO, as she said, in the next hour. Well, coming up, pressure mounts on Israel for this 4-day ceasefire to be extended as more hostages are freed. What will happen next? Stay tuned. This is Bloomberg.
To the world of business, every weekday at 5 p.m. Eastern Time. Hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
The reception, the acceptance of Purosang has been extraordinarily high. We had to stop the order for a while because we had to understand how to manage the supply chain. So there is a strong traction of Purosang all over the world.
How much do you worry about increasing production and therefore becoming, I guess, less high-end luxury?
We are making 13,000, 14,000 cars per year. We will not grow a lot in the future because we want to grow more for value, not for volume. And maybe one number, you know how many cars Ferrari did we put on the road since the beginning, since the first one? 250, 260,000. So 250,000 cars in a market where there are million and million of cars every year.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
I want to say there is also an outline that says you can release 10 more every additional day. It is a blessed thing. But in the same breath, I also told the president that at the end of the outline, we will return with all our strength to realize our goal, the elimination of Hamas.
That was the Israel Prime Minister Benjamin Netanyahu there speaking over the release of several hostages over the weekend. Well, Israel and Hamas have signaled that a ceasefire in Gaza could be extended beyond today to allow the release of more hostages and prisoners. Joining us now with the very latest is our Bloomberg opinion columnist, Bobby Ghosh. Bobby, it's been a constructive weekend for all in terms of hostages being released. Now, the question is, how much political pressure is there on Bibi there? You're hearing him sound unrelenting. You may get an extension of a day today for releases, but it doesn't sound like Bibi is ready to extend this pause in any way.
Well, he's under tremendous pressure. There are different kinds of pressure. Domestically, a lot of Israelis, having seen this exchange being successful, it was not certain that it would succeed, but it has succeeded. It has built an appetite for more. People, particularly families whose loved ones are still being held hostage, will put a lot of pressure on Netanyahu to continue the truce. There's enormous international pressure from President Biden on down. President Biden has said he would like to see the truce extended as long as hostages are being released. And if you are the Prime Minister of Israel, you don't ignore the President of the United States. On the other hand, there are military considerations. Every day that you extend, you're giving potentially Hamas more time to regroup, rearm, and become more dangerous once again. Every day that you extend, it becomes harder to get back into the fight because the momentum is lost, and international opinion, suddenly you begin to look like the bad guy because you're ending the truce while hostages are still there. So he's trying to balance these different pressures, and I think in the end, the decision he will take, because of the nature of the conflict, because of the nature of Netanyahu himself, is the military one. I think that will be ultimately the main guide. As long as his commanders are telling him, yes, we can give them another day and another day and another day, and we'll be okay to get back into the fight as soon as that's done, I think he'll continue.
Bobby, good morning to you. Great to speak. So when we look at the contours of this deal and who helped bring it forth, it was Qatar in Egypt. What does that tell us about their role and the role of the wider community, the global community, in ultimately bringing this war to an end?
Well, Qatar is the platform on which these conversations can be held. It's very important to have somebody, some country play that role, be the place where the different protagonists of this particular conflict different belligerents can meet directly or indirectly. Whether or not Qatar can actually get Hamas to do something, I'm a little skeptical. But when Hamas is ready to make a deal, Qatar is there for Hamas to use as an interlocutor, and that's very, very important. With Egypt, well, Egypt has the only border with Gaza that's not an Israeli border. All the humanitarian aid that's going into Gaza right now, most of it is flowing through that border, Rafah crossing it's called. And Egypt, of course, has had relations with Hamas, tense relations over many years, has been a sort of reliable interlocutor from the Israeli point of view. So Israel and Qatar will play a very important role. They have done until now and will continue to do that. If the truce is to be extended, then Qatar in Doha is where that will be agreed, and Egypt directly or indirectly will act as a kind of guarantor.
Where is the evolution of the story? We've touched on it several times, that there's domestic pressure and the polls are mounting against Netanyahu to remain in office. Again, we have a war coalition, we have a nation at war. Yeah. It would be very strange to see him step down, but is there a growing global pressure, political pressure on Bibi to step aside so that there is some kind of an off-ramp, a more material off-ramp in this war?
Well, he hasn't really, throughout his career, he hasn't really cared very much about international opinion, Netanyahu. But domestic.
You differentiate between American opinion and international opinion, don't you?
Even American opinion, you know, President Biden said a few days ago, a couple of weeks ago, that he should, indirectly, he should consider how he's leaving his office to the next prime minister, which is kind of a pretty broad hint. He didn't take it. He does care about domestic polls, of course. He has to. He's a professional politician. And the domestic calls for his resignation are mounting. People don't necessarily want to see a big change in the middle of a war, but Israel, remember, uniquely among the nations of the world, Israel has a deep bench of politicians who come from a military background. So for Israel to have a change of leadership in the middle of a war might be less onerous than it might be for many other countries. Okay. But in the end, it will come down to Bibi's own decision and the decision of his close coalition. Those people, his close coalition tend to be on the far right. I think they're pretty, if not happy, then they are certainly, they'd be more comfortable with Netanyahu at the helm rather than somebody they would perceive as being more liberal, more accommodating.
Right. Bob, we've talked multiple times of what the end of a war looks like, what comes after war. There is a Times of London story sourced from a senior officer in Israel that they didn't name, but saying that Israel's military is looking to conduct operations in Gaza for up to a year, and plans would likely involve setting up security control indefinitely, even after it's eradicated Hamas. I mean, surely global opinion, the court of global opinion, would not be happy with an indefinite system of security control within Gaza.
No, it would not. And perhaps more important in the context of what we were just saying, I don't think that would be popular with Israelis. The Israeli public opinion would not be in favor of that, having to have their soldiers in Gaza indefinitely. They know, they've done that before, and they know that that does not really bode well. The longer you have your soldiers in there, the more they remain quite large targets, and it gives the enemy, and it's not just Hamas, there are other groups that are operating, Palestinian Islamic Jihad, who will regard those soldiers as an opportunity to take potshots. And that's not a good situation to be in, especially since there's no real, that's not the way to end the conflict. We know that there have been decades of this conflict. Just having military operations in Gaza, just as we've seen in the West Bank, does not really move the needle forward toward ending the conflict. There's no question what the end state has to be. President Biden has said it, the Arab states have said it, there has to be a path to a two-state solution. Having Israeli soldiers in Gaza indefinitely is not that path.
Right, and perhaps has some echoes of American wars in the Middle East. Bobby, thank you so much for joining us on this Monday morning. That is Bobby Ghosh of Bloomberg Opinion. Man, as a quick check on these markets as we head to break. S&P 500 futures lower this morning, risk off it would seem, and that just crushing oil this morning. Below $95 a barrel, $75 a barrel rather. We're at 74.09, down 2%, just a few days away from the online now OPEC Plus meeting.
Maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
This is Bloomberg Brief. I'm Danny Berger in London alongside Manish Cranny in New York. Now let's get you set up for the week because it's a busy one, especially for central bank leaders. President Lagarde will be speaking at 9 a.m. Eastern, then again on Tuesday, Thursday, and Friday. We're also going to hear from Governor Bailey on Wednesday. We already heard from him this morning, and Chair Powell on Friday. Then U.S. GDP and core PCE coming on Wednesday. Personal income and spending plus PCE deflator on Thursday. PMI and ISM manufacturing on Friday. And then over in Europe, German and Spanish CPI are out on Wednesday. Then Eurozone and UK PMIs on Friday. But, man, as we also can't forget, Thursday, we're finally going to get that OPEC Plus meeting, but it's not in person. It's online this time around.
No, and it's the chaotic kind of moves. It was delayed, then it was going to be physical, then we've gone to virtual. And the issue is, can they coalesce around a deal? We understand it's progressed from angst over the Emiratis getting a bump in their production to angst with the African nations. There you go, Danny. It really has taken a leg lower through the past hour, hasn't it?
It has, and this is probably not the setup that the Saudis or all of OPEC really want into this meeting. But it is a general risk-offiness, I don't know if that's a word, but whatever, we'll make it one, to this market this morning. It's perhaps more those fears of demand dominating today, but we also know we're fearful of supply. Non-OPEC plus supply is moving higher.
Yes, and those draws didn't come through in this quarter as was expected. You got the likes of Pierre Andurand, a number of other key market commentators saying, look, Saudi and Russia may well have to extend the lollipop cuts, the unilateral cuts, into the first quarter to create a floor. That's it for Brief. Bloomberg Brief, that is. Surveillance is up next.
Part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we could deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly, we want to be there for her, but it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California, San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal. Now, more to the point.
What is the lesson or the observation?
To cut rates until the second half of next year.
The higher for longer doesn't matter to the equity markets.
The rally we've seen in equities, in the last 3 to 4 weeks, it's been a spectacular sort of very short rally.
As we look out to next year, we think the S&P 500 can hit 5,000 by the end of the year.
The holiday rally is certainly very much in force.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Your equity market on the S&P pulling back just a touch, down by 0.1%. The S&P 500 on a 4-week winning streak. TK, we've got a new target. Binky Charter, Deutsche Bank, 5,100 year-end next year.
It's a 5,000 club. We're only interviewing people, folks, to the end of the year that believe in SPX 5,000. Forget about the doom. Lori Calvasini coming up with some optimism there as well. I thought it was a sobering weekend where those cautious had to recalibrate. and it'll be fascinating. I have no idea what to expect here as we launch into December.
We've seen a lot of this, haven't we? 5K. You mentioned Lori Calvasina over at RBC. We'll catch up with her in about 5 minutes' time. Lisa, also Savita Subramaniam over at Bank of America, just sort of getting around this idea that maybe this S&P 500 has got something like 10% upside from here.
And how much is this going to be driven by a bond rally with yields coming in because of disinflation and because of this sort of soft landing narrative versus some sort of recession that then spurs some sort of rate cuts that then spurs a stock market rally?
With a 4.95 two-year yield, are yields coming in? I noticed quietly in the last 5 days, the two-year yield is revisiting 5-ish.
Data point of the week last week, jobless claims Wednesday. Here we are talking about jobless claims starting to climb. Wondering whether we're at that inflection point where you have to start getting worried about the weakness in the labour market bank. Jobless claims going back down towards 200K, Bramo. Looking at Black Friday, holiday shopping, going into the weekend, Adobe Analytics saying that online things look pretty decent. This consumer holding on.
Yeah, up about 7.5%, I believe, year over year when you start to look at some of the consumption numbers. So here's the thing. Are we looking at a situation where everything's just moderate just enough, or are we going to see recession delayed? Deutsche Bank, on the other side of the bank, actually projecting that they weren't wrong, they were just early, and that we're going to still get the same kind of downturn.
That's my favorite, Bravo.
But
that's my favorite.
I heard so much of that over the weekend.
Yeah, but Matt Lazzetti was out front saying that's a recession, but way out. Here's Binky Chadha. John, despite above-trend growth, core inflation has fallen. Continued declines would return inflation to a pre-pandemic range without requiring slower growth. Recession is widely anticipated and expected to be mild.
Does Binky whisper the recession part?
The recession.
Whispers
Lazzetti
recession.
nailed the slowdown, and he said it would be out there, not soon, and I guess that's still where we are.
At the Lisa Thanksgiving dinner, they were screaming recession at TK on Thursday.
100%.
They don't whisper it.
No. It's sort of, why are people unhappy? We don't understand. What is social media going to happen? Actually, the best was for me when one person said, maybe if robots are smarter than us, maybe it's for the best.
Is that actually what someone said at your dinner?
But I saw it.
Is this where this comes from? This is where this comes from.
It goes deep.
Okay.
I saw it on social that Lisa overcooked the Brussels sprouts.
I did.
That was enough of a scandal right there.
Yeah, I did.
How did you do that?
I left them in for too long. It wasn't that complicated.
Did you put them in the oven?
Yes.
Did you boil them first?
No.
Okay.
No.
So you sort of burned them, you charred them?
No, charred would have been better.
Okay.
I just kind of left them in for too long.
So what colour did they come out?
Just a little...
Not green anymore. Okay.
No, Martha taught me, you take the bowl, you throw said sprouts in, olive oil, stir them around, salt
I did
and pepper,
that. Shallots, garlic.
Nice, it started well.
And then just left in for way too long.
More on Bramo's Thanksgiving dinner later in the program. Let's turn to the scores, the price action in financial markets to kick off your Monday morning. Shaping up as follows: your S&P 500 negative by 0.1% on the S&P. Never mind the Jets, the Patriots, Tom. Just awful. Thankful for Dolly Parton last week. What did you make of that? Just fantastic, TK.
Yeah.
What a performance.
Yeah,
Thursday lunchtime.
Yeah.
Just fantastic.
The Giants did well. Just want to throw that out there. So,
you're a Giants fan?
There are Giants fans in the family.
In the Bramo household.
Yeah, okay.
Good.
Let's talk about this week ahead. It's not going to be with particular sports data for me. Eco data is going to be Wednesday, the Fed's beige book, which I'm going to read. Anecdotes are important. Thursday, we get personal income and spending data. The core PCE deflator is what I am watching. Do we see enough disinflation to change the narrative of people who have seen their food prices climb about 30% since 2020? This is one of the key questions. We get jobless claims, and on Friday, ISM manufacturing and auto sales. Treasury auctions, they return. Today, we get $54 billion of two-year treasuries and $55 billion of five-year notes being auctioned. Tuesday, $39 billion of seven-year notes. This has been a massive mover of the equity market. Does it continue to be? And this, you guys are all going to be very happy.
Drum roll.
Yeah. Fed speak is returning. Tuesday, we hear from Chicago Fed President Austin Goolsbee and Fed Governor Chris Waller. Wednesday, we hear from Cleveland Fed's Loretta Mester. Friday, it's Fed Chair Jay Powell in a fireside chat, along with Fed Governor Lisa Cook and the Fed's Goolsbee yet again.
Can't wait. Proceed carefully. 50 different ways. Coming up a little bit later this week. Couple of programming notes for you. Fantastic exclusive conversation with the British Prime Minister Rishi Sunak and Francine Lacqua. We'll bring you some highlights of that a little bit later. And catching up with Blackstone's Steve Schwarzman, TK. That conversation about 25 minutes away.
Really timely. There's a lot of big thing, great and worthy talk, but the real issue with him is his support of the former president. Things heating up politically. We'll do a lot on that here this week as well. And then also what's going on it, his said Blackstone. I mean, it's really interesting to me to see what the private markets like Apollo, like Blackstone, are doing into the end of the year.
All of that just around the corner. We begin the program with Laurie Cavacina, head of US equity strategy at RBC Capital Markets. Laurie, good morning. We hope you all had a wonderful Thanksgiving. I want to kick off with your call, 5,000 rather, year end on the S&P 500 for next year. Deutsche Bank going one further at 5,100. Laurie, talk to us about the path to 5K.
Well, thanks for having me as always. And look, we purposefully did not put out, we see a near-term pullback, then a resurgence. I think a lot of people got caught in that trap in 2023, calling for a near-term pullback in the first quarter that didn't end up happening. I do think we'll be watching our sentiment indicator very closely. It's been the best star in the sky to navigate the equity market this year, but it's also round-tripped a couple times. It started out giving you a screaming buy signal because of deep pessimism, returned to that post-SVB, gave a sell signal in August, and then gave a buy signal again in November. So I think we're going to have to just be very tactical in that. I have been telling people November is very consistently a strong month, but December is a little bit more hit or miss. So we'll see if we end up getting the Santa or Grinch in December. But I do think the path for equities is higher next year. And if we do have a bit of a short-term pullback either in December or to start the year, I expect it to be temporary.
Laurie, Goldman Sachs had a note, thanks Zero Hedge for this, on sales growth looking at 2 years, 23, 24, 25. And the difference between the Magnificent Seven with 11% sales growth versus the SPX 493 of 3% sales growth. Why would anybody sell the Magnificent Seven right now?
I think it's a great question, Tom. When we look at our indicators and we look at the mega cap growth trade broadly, it looks crowded. If you look at the weekly CFTC data on NASDAQ 100 futures positioning, we're basically close to peak valuation and growth relative to value. If you look at the Russell 1000 on a weighted PE multiple, which is going to be very heavily influenced by that Magnificent Seven. And if you look at earnings momentum, we're still seeing better earnings revision trends in growth and value, but value is starting to catch up a little bit. So we are seeing that leadership on the earnings side fade a little bit. All of that tells me that there should be a pause in growth leadership at some point. But I think one of the reasons people can't really permanently quit these growth stocks is, kind of hitting on exactly what you said, the idea that there will be superior growth there over the intermediate term. And if you look at GDP forecasts for next year, 1% in real terms anticipated by the street, 1.8% in 2025. When we're in a sub 2% GDP environment, growth stocks usually do outperform because economic growth is perceived to be scarce. So I do think there is a real tension. We still like the tech sector, even though we have these shorter term tactical concerns on growth. Had those tactical concerns on growth, frankly, for a while, and they've yet to really materialize in a big way. And I do feel like you may need to see a real ratcheting up of GDP expectations before you can really see growth lose some of that leadership dominance.
When you talk about sentiment and how really that's been a lodestone for you, it's figuring out where is investor sentiment and betting against it. Am I correct?
Basically, one of the things I've learned over my career, Lisa, is that when everybody is really, really pessimistic, that's usually a fantastic time to buy. If you look at when the AAII net bullishness indicator is, sort of 1 standard deviation or 2 standard deviations below the long-term average, I forget the exact stat, but it's in the 80s in terms of the percent of time that you're up 12 months later. And you see similar stats if you look on the flip side when people are overly enthusiastic. Now, if you're above 1 standard deviation on extreme optimism, you still tend to see like a 5% gain over the next 12 months. So it's not necessarily a washout, but it does tell you that you tend to see consolidation. You do tend to see some choppier markets. And I think that's why it's so important, Lisa, to really prioritize data over narratives. I know a lot of strategists like to tell a great story and then they go out and put together their charts to try to fit whatever narrative they're pushing out there. But I really think that you have to stick to the data, and things like that sentiment indicator will keep you into falling into consensus traps. Again, when everybody just sort of gloms onto the same narrative and things get too extreme.
Well, the narrative that we've been hearing again and again is 5,000 on the S&P going into next year, at least if not more. And there has been a sort of boom in optimism that we've seen. Does that mean it's time to start taking some chips off the table and to be a little bit less optimistic? Or does this mean that finally you might see some of that cash at record levels going into the equity market?
Well, it's interesting, Lisa. You know, everybody wants to sort of talk about this idea, and this is maybe on the more bearish side of the table, that bonds look more attractive than stocks, and the earnings yield has collapsed relative to the bond yield. And all that is true. But if you actually go back, there have been periods in history when equity investors or investors in general have taken up both their equity allocations and their bond allocations at the same time. So I don't think it's unheard of for both to do well. You know, 5,000 is starting to be a number we're hearing a lot. I think we were maybe the second person on the sell side that had it when we put ours out, but you are starting to hear about it. And I think 10% is usually a reasonable place that a lot of strategists start. We do have one model that can take us up to 5,300, and that's looking at our valuation work and earnings work. And I will tell you, Lisa, like, and as I was putting the report together, you always think about kind of where did you go wrong in the past year. I was more optimistic than most, but not optimistic in the end. And that valuation model was the one thing that was telling me all year to look for 4,700, 4,800 on the S&P. It's pointing to 4,700 on the end of the year now for 2023. One point it was saying 48, 49. So I do think you have to have a little bit of humility when you look at these forecasts. We look at a bunch of different models. We take the median. Some are more constructive, some are less. But I do think we do have to pay attention to that bull case heading into next year, because that's really what worked this year.
Does that mean a banner Calvacina says 5,300? I think we can go there.
Not quite. I think we're sticking with 5K. Laurie, I just wanted to jump in. When you were putting this together, surely 5K was something like 20% upside at the time.
So, you know, John, I started back in October pricing the models, and we actually published a report in October where we said we're not going to do our target yet, but here's what all the models are showing. And back then we were getting, you know, a little bit of a more subdued number because we had a lower starting point. So we did price everything as of mid-November. I think a lot of our models we froze as November 15th, November 16th. So we really are kind of getting sort of a true 10% from current conditions as of mid-November. Basically, when I do this, John, I go into a black hole for a few days, don't answer my phone, don't answer email, and don't talk to anybody, and update all at once. So.
Well, welcome back out of the black hole, Laurie. We're happy to see you. Laurie Calvacina, RBC Capital Markets, looking for 5K year-end next year. Big mystery for us over the last week, the state of the U.S. consumer. I want to go back to jobless claims in America, coming back down towards 200K. Last week, we had some retailers, the likes of Best Buy, saying things looking out to the end of the year, not great. Then we've got this from Adobe Analytics, Lisa, that, as you indicated, sales are up by 7.5% compared with last year online on Black Friday, the number $9.8 billion. What is it right now? The conflicting signals you're getting from corporations, or just the raw hard data that you see in jobless claims?
Honestly, this is the tricky thing. Is it specific items? Is it specific jobs that are driving these things? I'm thinking of the online sales that conflict with other data that came out that showed a much more modest increase of about 2.5%, and that was tied more to the brick and mortar, feet on the ground kind of retail stores that are more tied to the non-electronic goods. So are we just continuing to see that divergence of the leadership of everyone spending every cent they have?
I watched too much college football this weekend, which is helpful if you want to get away from New York City. And I'm going to overlay A Prosperous America, John, with Neil Dutta's rising real incomes. The real issue here is even across all of our societal structure, we've got a lower inflation making for a better income.
True. It's good to be back, TK.
Yeah, it's
nice to be around family this Monday morning.
Yeah, you know.
Ed Giardini of Giardini Research bullish this equity market. Coming up in the next hour, futures pulling back 0.1% from New York. Good morning.
Was going to keep bringing World Cup. This is a three as the economic picture covering the intersections of Hollywood, Silicon Valley, and beyond.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Critically needed aid is going in and hostages are coming out. This deal is structured so that it can be extended, to keep building on these results. That's my goal, that's our goal, to keep this pause going beyond tomorrow so that we can continue to see more hostages come out and surge more humanitarian relief into those in need in Gaza.
The President of the United States speaking over the weekend as a pause in the Israel-Hamas war allowed for the release of hostages from Gaza. More on that story in just a moment. If you are back with us, welcome back. Your equity market on the S&P 500 shaping up as follows. The scores look like this. We're negative by 0.1% on the S&P. On a 10-year in the Treasury market, 446.65. Here's the call from Deutsche Bank. We mentioned Binky Charter looking for 5,100 on the S&P year-end next year. Here's the call from Jim Reed and David Folkert-Lando. Looking ahead to next year, Lisa, a mild U.S. recession in the first half of 2024. So there's Binky saying 5,100 on the S&P, which is more than 10% upside from where we are right now on the benchmark in America. And here's the economics team saying recession in early 24.
And Binky kind of bends this around by saying it's going to be a soft recession, and that's probably what's going to get us to new highs, and we're going to bring rates down, so it's going to help fuel even more gains. But there is this question of whether people are just pushing back the calls that they had last year to next year, right? So it didn't happen in 2023. Is it going to happen in 2024? I do wonder about that because there are some pretty aggressive rate cutting calls from that same Deutsche Bank team as well, including 100 basis points of cuts over at the ECB.
Are you saying they just edit last year's outlook
because
for next year?
I actually have an incredible amount of respect for
just
them.
Change the date on
well,
it.
I don't think it's quite that simple, but there is still this idea that we have the same pathway. It's just that the time frame has shifted.
The time frame has shifted. They're redoing, and what they're redoing to is revenue growth and earnings and corporations adapting. I would take it away from all the macro babble. Folkert-Landau's wonderful because he looks for fiscal stimulus because there's two wars, but you know the answer here is I would look at the micro, which is people earning money, corporations adapting, and that leads me to where there's a cumulative 2024 where the Magnificent Seven continue.
And yet people feel absolutely terrible about this economy.
It's just terrible.
I went over
It's
this
terrible.
Empower outlook, Tom, this Empower poll on what Americans need to be happy in this country. How much
the
they
amount
need
of
to
income
work.
needed?
How much they
Don't
need
get
to
me
work.
going,
Okay,
Con.
what do you think they need? What do you think they need on average?
Well, we were looking for 38,000 a few years ago.
$284,167 a year. That's on average. Go by demographic. Let's go by age group. Millennials, Tom. Do you know what millennials think they need? $525,000 US. A number that isn't too far south from the number that you would need to get into the top 1% of income earners in this country. You want to know why people are unhappy, TK? Because a lot of people aren't earning the money they think they need to be happy in this country because things are so expensive. Try buying a house, raising a family.
Well, that's
the price
a key.
of things
Raising
in
a
this country
family is
now.
a key here. And on a societal basis, and I wonder if this will be an election issue, is the idea of children or no children. Because what's really metered off the pandemic is having children, and particularly young, ill-mannered children, is support as well. I don't want to get personal, but the children.
I found those numbers absolutely staggering. Absolutely staggering.
It's always been there, but I do admit it's worse now than it's been. We're going to continue here on a Monday. Joining us now with some great visibility in recent days with Bloomberg Television and Radio is Bobby Ghosh. She's with Bloomberg Opinion, but far more than that with Time Magazine. Earned experience in Baghdad and, of course, in the greater Middle East as well. We're thrilled we could get an update this morning. What is the Western media getting wrong right now? All weekend, I saw a hostage update. It's like we've almost forgotten about the war.
Yes, we have. And the people who haven't forgotten are Israel's military commanders. They've still got their eyes on the goal that Benjamin Netanyahu, the prime minister, set immediately after the terrorist attacks of October 7th, which is destroy Hamas completely. Can that actually be done? That's a question for a longer debate, but that's still the goal. And for them, this truce of 4 days is an interruption of military operations. They're keen to resume military operations with that goal in mind. Whereas there's a lot of international discussion about extending the troop, we just saw that clip of President Biden saying he'd like the truce to be extended. Israel military commanders want to get back to the fighting because they know they have to sooner or later.
I've been dying to talk to you about one question I have, and you lived this like no one with an extended tenure in Baghdad. You didn't have TikTok. No. You didn't have social media. You didn't have the immediate visibility of this horror that we've seen. Could we have done any of the past stuff with the social media we have now? How does it change the present discussion as well?
Well, it changes the optics for the politicians. They become much more keenly aware of public opinion in the way that they weren't. I mean, 23 years ago, one of my first exposure to a Middle Eastern war was during the Second Intifada in the West Bank, in Jenin. At that time, politicians could sort of block out the noise, if you like, of public opinion and make decisions based on political priorities, but also military and strategic considerations. What social media does is that it prevents you from blocking off information, and particularly politicians like Benjamin Netanyahu, who are populists, who've always been populists, who care very much for public opinion. That combination of someone who cares that much and the public opinion being so visible muddies the water. It makes decision-making much murkier than it might have been before.
Help us build on that, just in terms of public opinion, domestically speaking. Who's under more pressure to extend the ceasefire now? The President of the United States or the Israeli Prime Minister?
Well, the Israeli Prime Minister, because the President of the United States is speaking to him directly and saying, extend the truce. If you're the Prime Minister of Israel, you can't really ignore the President of the United States. He is your most important backer as world opinion grows more and more against Israel in this conflict. Having the President of the United States behind you becomes more and more important. So Netanyahu is going to really struggle with this decision. On the one hand, no less a person than Joe Biden speaking directly to him and speaking directly to the world is saying, I want this truce extended. And then on the other side, you have these military commanders saying, you extend this truce, you're giving Hamas more time to regroup. You extend this truce, it becomes difficult for us even sort of optically and politically to get back into the fight.
There's a lot in a statement, particularly from this president. Over the weekend, when he says things like that, can you conclude that he is losing the will to support the military activities of Israel?
Well, there have been lots of little bits of, lots of hints and suggestions of that. Whereas the president...
Is that the right interpretation of what he said over the weekend?
I think that is. And it's not that it was just one soundbite. For days now, for a couple of weeks now, the White House has been quietly briefing journalists on background to say that they're really anxious about a few things. The fact that Israel seems to be going in too hard and there's too much collateral damage among civilians in Gaza. They've been really concerned that Israel, more than a month, 50 days into this conflict now, Israel has not yet communicated what's going to happen the day after. There's no day after plan. And with every passing day, it becomes harder and harder to excuse that. And the White House is really anxious that Netanyahu has not told them what he has in his mind for what comes after the fighting stops.
Israel has said that they will continue the truce for every day that Hamas produces 10 or more hostages and transfers them over. Do we have a sense of how much pressure Hamas is under from Qatar, which has been negotiating at a time where perhaps the dial is shifting a little bit against them as well?
Well, Israel said it might extend. It has not said for certain that it will. It says that this offer is on the table. And again, we heard Netanyahu there in that clip saying it's a blessing to have that option. But he hasn't committed himself. He's been very careful about that. Hamas benefits from every day of extension that it can get, right? Its fighters have taken a real battering. It's the infrastructure that it has, its arms supplies, its capacity to build more arms, has taken a severe battering. So every day that it can get, it will very happily take. Is there pressure from Qatar and also Egypt and others? Yes, there is. We've also seen, and it's hard to know because it's impossible to conduct polling in a place like Gaza in the best of times, and certainly not in the middle of a war, but there's some anecdotal evidence that ordinary Palestinians are pushing back against Hamas, not content simply to blame the Israelis, but also saying, well, Hamas is partly responsible for our predicament.
Bobby, appreciate the update. Thank you, sir. Bobby Gosha, Bloomberg Opinion. More on those developments out of the Middle East through this morning. Coming up next, Steve Schwartzman of Blackstone sitting down with Bloomberg's Francine Lacqua from New York City this morning. Good morning.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
4 weeks of gains on the S&P 500. Believe it or not, the longest weekly winning streak going back to June on the S&P 500. Equity futures look like this on the S&P. On the Nasdaq, we're negative by 0.1% on the S&P 500. On the Nasdaq 100, down about 1/10% as well. The Russell of small caps all over the place. We're down about 0.5%, negative by 0.46%. Getting a ton of outlooks from Wall Street. Top of the pile, Deutsche Bank, Binky Charter, 5,100 on the S&P. Throw in Lori Calvasina from earlier this morning, RBC 5K.
Right.
Bank of America, Savita Subramaniam, 5K. Tom, consensus, is it starting to coalesce around this view that we've got upside of high single digits, low double digits next year?
Yeah, there's no question about that. But the bias here is to study those that nailed 2023. Granted, it all happened in the last 6 weeks. Bikram Chadha did that. He's been bullish throughout the year. John Stolfus, another one. It's a nice group of people that nailed this, but they nailed it right at the end. So I got to pay more attention to why Binky Chadha continues bullish versus others that are catching up.
Well, Goldman Sachs seems to agree too. Everyone seems to be bullish heading into next year. The reasons for why are so different, right? Is it because we have an economy that keeps chugging along and stocks can keep eking out the returns of corporations led by the Magnificent Seven or the Magnificent One if you're just looking at NVIDIA? Or is this something that is on the heels of a shallow downturn? And sort of that's what's interesting to me is the daylight between the rationale all getting to the same place.
I think you have to remember, if you told us at the start of the year that rates would be through 5%, the jobless claims would still be close to 200K, the unemployment, Tom, would be south of 4, and we'd have these disinflationary trends going into year end. I think a lot of people would say, keep dreaming, love it, let's buy stocks. But that's been the story, Tom, of the year so far. Now, this can be a moment in time and not the ultimate destination. I understand all of that, and we could talk about where we're going to go in 2024. But, Tom, that's what's evolved in 2023.
The great underestimation of 70% of the economy, the American consumer. I got a PE on Walmart rounded up 29. Even with earnings growth next year, Walmart 25. I don't think anyone, including the bulls, estimated we would see multiple expansion like that and something growing at a single-digit level.
So this is how the conversation goes on Wall Street at the moment. Give me a price target on the S&P for next year. Follow-up question. How many cuts are you looking for in the next 12 months? Let's turn to the bond market. 2-year, 10-year, 30-year. I would say jobless claims last week helping keep this 2-year pinned close to 5%. 494.40 on a 2-year this morning. 10-year, 447. 30-year, 460. Way off the cycle highs of the last couple of months or so. We were at 5% plus on a 10-year only a few weeks back. The 2-year at about 525, 526, so well off cycle highs at the moment. But here there's a rate cut call from Deutsche Bank. 175 basis points of Fed cuts in 2024. Lisa, 175. That is pretty deep.
And we've heard something similar from UBS, right, where they came out and they expect pretty aggressive rate cutting next year. Is this because of a severe recession? No, it's cosmetic cuts, which is somehow going to enter the lexicon, and we've heard this before, which is essentially that if you end up with slower growth, then just de facto you have a more restrictive rate, so you can cut rates even if you haven't gotten some sort of severe downturn. This is really the key question. Is there a conflict between economic data, including jobless claims, coming in better than expected, and the expectation that the Fed will be able to cut rates? This is really going to be the reason why I'm watching PCE.
And to me, it's data dependency as well. I mean, you look at the Fed game, Jan, and I'm sorry, I go back to data dependency. Second look GDP, we're looking for an increase on survey to 5.0%, third quarter GDP. Go to the deflator with a continued disinflation. Go to what you love, ISM manufacturing, a more optimistic survey statistic, pretty gloomy, but more optimistic. And then you go into the jobs report, which is coming up on December 8th.
Next Friday.
Yeah.
Not this Friday, next Friday. Yeah.
And you go into the jobs report, and I have to wait for all that data to reassess.
175 basis points of Fed cuts and 0.6% GDP expected in 2024. Deutsche Bank's outlook. Let's finish on foreign exchange. The euro is shaping up as follows against the dollar. Euro dollar positive by about 0.1%. Let's call it 109.50. We talked about Fed cuts. Looking for some ECB cuts as well next year over at Deutsche Bank. They're talking about 100 basis points from June to year end 2024.
Yeah, well, I mean, to me, it makes sense if they're talking about stagflation, although the problem is, can they cut? And this really, again, we haven't been talking about inflation. And if you look at longer-term inflation expectations, they've actually come in close to where the Fed is expecting it to be. The recent rate volatility has been something else than just pure inflation.
I would suggest that the data dependency in Europe is even more key than here, overlaid by the political bombshells, John, including the vote in the Netherlands, which I think has clearly been underplayed in the American media.
Do you think we've conquered the bond market volatility? Some smaller moves last week?
I'm not
It's a holiday week. I don't know what to say about it, but...
Well, I'll give you a holiday week. I mean, I come in here and I look at the screen because I had 8 days off. It's like a mini sabbatical.
Is that what it felt like?
Yeah, euro-yen here is weakened back out. We're not through to yen weakness, but, you know, in the global litmus paper where Americans are, you know, I'm looking at, you know, what did Michigan do? I thought the Ohio State was actually pretty good. But
Did you watch that game?
I watched some of it. Yeah,
Okay.
I like the punter from Michigan. He kept putting the ball.
I don't take you as a college football kind of guy.
No, I'm not. You know, but watch the Tots lose.
So.
I mean, it was, you know.
Yeah, it was a bad game.
Bad game. And I watched Formula One in Dubai. It was like all TV this weekend. And the answer is, you know, you sum it all up, and the yen's weakening back out, which is a global tendency towards disinflation.
I don't know how you got back towards the Japanese yen, but okay.
Yeah.
That's the price action under surveillance this morning. Pressure growing for Israel to extend the ceasefire in its war with Hamas. The 4-day pause has led to the release of 58 hostages, as well as allowing for aid to flow into Gaza. President Biden said he supports prolonging the pause, which is due to end tomorrow morning, while Israeli Prime Minister Benjamin Netanyahu said an extension was possible. Lisa, we've been building on this through this morning. How much daylight is there between the President of the United States and what he'd like to see, what he supports, and what his own party supports right now in this country?
It seems like quite a bit, and it's a very difficult sort of needle to thread for him at a time where he's pledged support. He backed away from saying that he wanted conditions placed on aid to Israel, even though members of his own party have come out with specific prescriptions for what kinds of conditions they want placed on that money. This, to me, is going to be an evolving tension, which just heightens the reason to possibly prolong the ceasefire politically for his own sake.
To me, it reminds me of 1979. And Iran and Jimmy Carter and the rest. We just staggered day by day with hostage news. And as Bobby Ghosh just told us, he said, there's the Israeli military forces. What are they doing? Twiddling their thumbs? I mean, I don't get how you juxtapose the two against each other.
Looking at crude, you wouldn't have a clue this is happening. 74 WTI.
Well said.
Elisa Brent crude, 79.56. We're down again today by a little more than 1%.
And some people are saying that even if at the delayed OPEC Plus meeting they end up affecting more cuts, you're still going to see a decline in oil prices. The why is going to be key, especially at a time where people are talking about a soft landing.
That's the latest in the commodity market and what's happening in the Middle East. Let's turn to the online shopping and Black Friday records. According to Adobe Analytics, $9.8 billion US spent online in America, with consumers leaning on buy now, pay later options. Lisa, we'll talk about that in a moment. Demand for electronics, TVs, audio equipment were particularly popular, helping boost online sales by 7.5% from a year ago. So these numbers contrast big time with what Best Buy was guiding us towards going into year end. And then I start to read about buy now, pay later, and it does make you a little bit nervous as to how much people are extending themselves going into the holiday shopping season.
You called that a long time ago. You said, is this going to be the end of some of the luxury boom if you get the end of the buy now, pay later? And it turns out we haven't gotten the end of it, which maybe muddies the waters a little bit. How long can people keep doing this if interest rates are going up to such a degree? It's a key question, especially as credit card delinquencies tick up. You start to see defaults picking up. You start to see total outstanding debt picking up. You know, we're coming from a low base. This is what people say. We don't have an overly leveraged consumer. Things look okay. But at what point don't they?
This consumer's just about holding on, just about holding on. Third and final story for you. UK Prime Minister Rishi Sunak denying his economic plans will put a squeeze on public spending. However, the country's fiscal watchdog says the PM's plans for tax cuts are funded largely by a £19 billion reduction in the real value of government spending. Speaking to Bloomberg's Francine Lacqua over the weekend, Sunak denying UK austerity is on the cart.
I think any commentary or accusation that that's what's happening is just simply unfounded. Government's already spending a lot of people's money, and what we need to see going forward is more productivity out of the public sector. It needs to match what we've seen in the private sector post-COVID, and I'd rather focus on efficiency in the public sector and prioritize cutting people's taxes rather than the government spending